5% off your total order, all with 0 down, 0 interest for 2 years. Learn more at aedoorsales.com.
We sell the best and service the rest. AE.
Actions, it says to me that the hurdle for at least those 9 other FOMC people is high in terms of hiking.
Sophia Drosas with us. We're going to go to Kevin Hassett at the White House here in about 5-6 minutes as well. We're thrilled to have Sophia Drosas of 0.72 with us today. Kevin Gordon emailed in from Schwab, and we were talking about domestic final sales. Folks, that's a wonderfully important statistic. I learned that from Bettina Dalton years ago. At Fidelity, the GDP number was some bit soggy, as Sophia just mentioned. Nominal GDP was, I believe, to be polite, over 6%. Fold in the oomph of the economy from the combined inflation in real GDP, and how Chairman Warsh can manage a supposed decline in nominal GDP.
Yes, well, that nominal GDP print probably speaks to ongoing health in corporate profits. As you know, corporate profits are coming off of...
It's got an AI overlay.
It does, but I would say that the issue with the AI, the CapEx boom continues, and the chair mentioned that yesterday. It's quite strong,
right.
But a large component of that is imported. So the potential for it to create overheating domestic conditions seems a bit less to me compared with other CapEx cycles.
Okay, we got to go back to Morgan Stanley here. I mean, we got to go back. I'm sorry, Steve. I got to go there. Audrey Child-Friedman was on. Did we, as an outlier yesterday, have the dollar finally break? Is this a moment where this shocking dollar resilience, even with higher rates, finally turns around and we get, with a lack of credibility, dollar weakness?
So I think the dollar is going to lose a little bit of interest rate support and has. Of course, the market has repriced, seeing that the Fed didn't act on the accumulated high level of inflation at the last 2 meetings. So the market's extrapolating that a bit forward in terms of the reaction function. But we also need to be cognizant of what other central banks are doing. So the ECB last week declined to hike and also stated a bit more of an open-ended path. So perhaps they will not fully meet the amount of tightening that's priced in. And other central banks might be sounding a bit circumspect. And we had the Bank of England this morning. They held rates. So the question to me is, the Fed may have come across a bit more dovish than some people expected, but I think that this is a broader trend among central banks now, as perhaps they contend with energy prices at higher levels, which also has a detrimental impact on growth. The trade-off isn't very clear here.
So what is the underlying inflation after? That's one of the questions I think the market's asking. How do you view it?
Do you have at 0.72 a disinflationary vector?
Well, I do think that inflation is going to moderate in the second half of the year where we were in the first half of the year. We're seeing already some moderation in rents and in services. And I think that there will be a bit more of that in the pipeline. Obviously, this morning we saw a below than expected move in inflation. So it seems to me that perhaps the worst is behind us. The issue for the Fed now is, though they might want to wait, and though maybe the data gave them a little bit of luxury of the time to wait, I don't think they can tolerate any acceleration going forward.
Oh, good news, Paul. I was so worried. I see a list of people moving out of 0.72. Freddie Peralta, Clay Holmes, AJ Minter, and I don't see Sophia Drosas' name on here. The Mets are cleaning house, aren't they?
Well, you know what it's like to be a Mets fan. It teaches you patience.
What is it like on the trading floor? Are you allowed to show any merch?
I love my Mets merch. It's co-branded, Mets and 0.72. But yes, as you know, a lot of economists love baseball, so that brings a little added fun to it.
Sophia, thank you so much for coming in today. Just hugely valuable, and all at 0.72. Thank you, Mr. Cohen, and all. And it's still the Mets, and they'll recover, we think. Coming up in this special edition, and now it is from the White House, Danny Berger and David Gura in discussion with Kevin Hassett. And what's interesting about this is a gentleman from University of Pennsylvania under Alan Auerbach, and Hassett is a schooled economist. That will make it most clear, to say the least. Again, a special edition of Bloomberg's Surveillance.
Welcome to our global TV and radio audiences. I'm Danny Berger alongside David Gura. Data showing the U.S. economy grew at a weaker than expected pace, while the Fed's preferred inflation gauge cooled in June. Let's bring in White House National Economic Council Director Kevin Hassett. Kevin, we can talk about the state of this economy in just a moment, but I want to begin with what you discussed yesterday before this Fed decision, saying that you have full confidence in Chair Kevin Warsh. Now it is a market that is rethought, that is losing confidence, with long-term yields pushing at their highest in more than 2 decades. And at the same time, economists giving counsel that they don't think that they are fully confident in this Fed either. Director Hassett, do you still have full confidence in Fed Chair Warsh?
Of course. And there's a natural transition time where a new leader comes in and tries to get the House in order. I think that, that there were 3 dissensions or 3 dissents, but, that happened to Jay Powell in the past as well. The dissents all came from regional Fed presidents, not from the actual governors. And so it sounds like he's got his house in Washington in order. And we'll look forward to seeing how it's going forward. But I think that his job just got a little bit easier if you looked at the PCE data that just came out, which was actually a top line of negative, which is very unusual. Core dropped a lot. And so I think the inflation numbers have continued to head in the direction that we saw with the previous CPI number, which is, an objective of the Fed, is to get those numbers down.
And we heard from him after the last CPI report not to look at one set of data discretely. But picking up on what Danny was asking about just a moment ago, there does seem to be some concern here that there is no clear reaction function at this time, no clear analytical framework from this Fed. Is that a concern to you? Is it something that you think that the Fed chair has to work to remedy here in meetings ahead?
Well, again, I think that the Fed's old political reaction function was based on outmoded science regarding the Phillips curve, and if you get a little bit of growth, then you got to hike rates. But that model assumes that the growth is coming from demand-side factors. And I think what Kevin Warsh has done is he's brought in a brain trust of some of the smartest people on earth to help rethink what's, given all the science we've had on what happens when there's supply versus demand shocks, what should the Fed be doing? And it's a lot different than what the Fed staff has been advising people to do over the last few years. And so I would say we're going to have a new, improved, and much better reaction function, and that's happening relatively quickly because Kevin's put some of the smartest people who've been working on this their whole career, like Karen Dinan at Harvard, to help him think about how to do that.
He might have his house in order, as you say, Director Hassett, but again, it's a market that is not in order. It is a long end yield, the 30-year yield, which yesterday closed at its highest since 2007 at 5.20. Are you concerned that this is a Fed chair that does not have control of these markets? Because, Director Hassett, that makes your life much harder. It makes this economy and consumers who want to buy a house, it makes their life much harder, and you, as you look at the cost of servicing debt.
Look, the bottom line is that Kevin Warsh was there before. He's an incredibly experienced guy. He's well respected and well liked by his colleagues, even the Democrats up on the board. And he'll do what the data say he should do, and he'll be independent. And the fact is that the data right now are taking the pressure off the Fed. And I think that the markets will get around to seeing that. Maybe they need another couple of prints like the one we saw today from PCE. But we should also talk about the GDP numbers today a little bit, because I think that they've been miscovered quite a bit. The fact is that final sales were up almost 4%. We had a big boom in consumption, a big boom in investment. We even had big positive housing numbers, and those were offset in the bottom line because the capital spending that we're doing is imported capital goods, which so you subtract imports from that, and then also because of technical changes in the price of oil, they revalued the oil inventories, and that's subtracted from GDP as well. So I think that the final sales number of 3.9 is really what I would say is the signal. So it's not a half full glass of GDP, it's a full glass.
Full glass of GDP. I want to pick up on something you said. You've known Kevin Warsh for an awful long time through Republican policy circles, and certainly your time at the Hoover Institution. And I'm curious, I think an open question here is Kevin Warsh a hawk or a dove? What would your answer to that question be?
I think he's a realist, but he's really serious about getting inflation back to its target. That's his job. He's a very, very pragmatic person who understands the responsibility of the Fed is a dual mandate, and the part of the mandate that's been out of control recently is inflation. And most of that was not the Fed's fault. Most of that happened, or at least not directly, because remember what happened was that right after Joe Biden took office, we had this massive stimulus, even though the COVID episode had mostly ended. And that massive stimulus was like a helicopter drop of cash into the economy. The thing is that the Fed was in denial that that would cause inflation for almost a year, and that's how inflation got out of control. But the stimulus that actually caused the inflation was the reckless spending by Joe Biden. And, I can promise you that this administration is not going to do anything like that.
I mean, again, Director Hassett, I would point out that we've had a lot of stimulus from this administration as well, be it COVID checks themselves or what we've seen in the one big beautiful bill. Even so, it is a president who yesterday echoed what you're saying, his confidence in Chair Hassett, but at the same time said that it's a difficult task because this is a Federal Reserve who is political. Director Hassett, who is political at the Fed? Would you view the 3 dissents as we saw in favor of a hike? Were those political votes by those FOMC members?
Well, I can't climb inside the heads of those folks, but as you know, before Kevin came into the Fed, that many times even, on this network, I talked about the sort of befuddling movements of the Fed. So Joe Biden is stimulating the economy like crazy, and the Fed saying it's transitory supply disruption, when obviously, I had interviews in May of that year where I said it looks like inflation is going to be around 7% because of the big chunk of demand that was being thrown into the economy by the Bidens. The Fed ignored that. They didn't really start tightening until Jay Powell was reappointed as Fed chair, and then they cut rates sharply right before the election in order to help Kamala Harris. When President Trump, in contrast, was elected, then even before he was inaugurated in the first term, the Fed started hiking rates in that December. And so that the patterns of their movements have been very, very suspicious. And so I don't want to speak to specific people, but those patterns are very suspicious. And I think that that's the kind of thing that's going to end now with Kevin Warsh.
Again, Director Hassett, I just have to push back against this. It's a Fed that cut rates since Trump's been in office. So I don't see how that is necessarily suspicious. I don't want to rehash the conversation we had last time, but that pattern's not there, as you say. Sure, they cut before Trump came into office, but it's a Fed that eased rates with Trump as president.
Look, the pattern I've described is not in dispute. And, I think that what's going to happen going forward is that the Fed will be responsive to the economic data and be independent, because Kevin is going to be there and he's going to manage the people who would try not to be independent. And so I'm very, very bullish about the prospects of the Fed policy moving forward in the proper direction, the nonpartisan and independent direction.
I'm struck by how much we're talking about the Biden administration and looking back, and perhaps we can look forward here in the minutes that we have left. There's a war going on in the Middle East. There's still war in Ukraine. And we have an administration now for which you work that's imposed these new tariffs under Section 301. What do you say to American consumers who acknowledge the fact that the inflation level is higher than the Fed's target and are worried that those two inflationary issues could make inflation more troublesome, more nettlesome, or even go higher here in the months ahead?
Well, I think that if you look at the positive prints we've had for CPI and PCE, you can see that energy is just a small part of the inflation story. So we've seen drug prices come down because of Trump RX. We've seen our deregulatory efforts lower prices for just about everything. We've seen the great work of Brooke Rollins and the Ag Department help food prices get under control. The only thing everybody was talking about when we first got here was egg prices. Egg prices are at an almost all-time low because we've done a much better job managing the avian flu than the previous administration. And so I think the price pressure is easing all around, and energy prices have for sure blipped up again for a while. But I think that if you look at futures markets, they expect that to recover relatively quickly, and that's our hope as well.
Well, why isn't that what we heard from Chair Warsh? She talked about that inflation still being an issue. They're committed to 2%, said that they're watching it. Kevin Warsh did. Director Hassett, it doesn't sound like a Federal Reserve or a chair that's on the same note as you are.
No, I disagree. I said things are heading in the right direction, and that's reassuring for the Fed. And I think that he's saying that he still has work to do. And saying you have work to do and things are heading in the right direction are not contrasts at all.
Kevin Hassett, let me pull an audible here. You wrote a book in 2002 called Bubbleology. And as you look at the AI sectors we've been doing over the course of the morning, are there warning signs that you see that we could be in bubble territory here?
The difference, I first know And the difference between the dot-com boom of the 90s and what we're seeing now with AI is that the AI companies are actually making money. So remember back then we had insane valuations for firms that had yet to make any money at all. And so you can wonder, well, are they ever going to make money? Pets.com, are they ever going to make money? It turns out the model of taking dog food to your house has worked pretty well for Amazon. But back then, the early firms that were doing that, they all went out of business. And so it ended up being that there was enthusiasm about the internet that in the long run was good enthusiasm, but it created a lot of failure, business failure. Here we've got like a few companies that have this remarkable investment that's increasing the productivity of firms all across the country, and they're charging their customers for the service in the terms of billions and billions of dollars. And so when you see real money and real success and real productivity growth and so on, then there's a rational explanation for why the increase in value is happening. Now, whether it goes too high or too low, that's something the market will figure out. But it's much harder to have a rational expectation for why things are going up when you don't see the money.
All right, Director Hassett, we really appreciate your time this morning, as we always do. Thank you for joining us.
There we are, Danny Berger, David Gura, with Kevin Hassett of Pennsylvania, and of course, leading so much of the president's economists. A special edition of Bloomberg Surveillance, and we're well timed here. We got a question in off our new subscriber and terminal operation here. This is really good. What's even better, it's from Perry's Plate up in Andover, Mass. She emailed in and with a question that links directly into Anna Wong's fame. Of course, this is Bloomberg.com/AskRadio for subscribers and terminal users only. Dr. Wong, Susan up in Andover, just simply, can we believe in the data? This is your wheelhouse. Can we still believe in the data from our economics team in Washington?
Look, U.S. has the best data in the world. The U.S. federal statistics still is the golden benchmark for all around the world, in all these OECD meetings discussing what's the optimal methodology. The U.S. delegation still, commands the most respect. But in terms of the real-time assessment with what's really going on, we always know that some problems exist, right? Like, for example, productivity data. It's notorious that productivity get revised significantly, so you cannot really trust quarter-to-quarter productivity data. And you have to take a long trend. GDP as well. GDP could get really revised in 5 to 10 years.
And I want to get this in before the market opening when we come back, folks. This is our interview of the day. There's no question about that. Anna Wong last night stopped the economic world with a blistering LinkedIn essay. I put it out on LinkedIn. I'll try to copy it over to Twitter as well. A quick guide to decoding Kevin Warsh's rhetorical style. Anna, he is from a Stanford-Chicago axis. He mentioned Robert Lucas in the Lucas critique. You are all Chicago. To begin the discussion, how much is Kevin Warsh off the academics of Chicago?
I think his mention of Lucas critique underpins why he is suspicious of the PCE measure. One reason why the bond market reacted the way they did was that they were like, well, if Kevin Warsh is not going to tell us what is the inflation measure he cares about while criticizing the PCE, then we're just going to do our thing. So the Lucas critique would say that as people learn about the problems and various ways of how it works, they will adjust their behavior. So PCE, so I think Kevin Warsh thinks that there are a couple problems with the PCE measure.
That's a beautiful intro. Dr. Wong with us. We're going to continue with Anna Wong, our interview of the day over this upset. And as we go to the opening bell, it's about the stock market, Paul.
Sure.
The 30-year bond, 5.20%. That's a new number with a new opening of the market. Alexis Christoforous.
Thanks a lot, Tom. And we saw that rally sort of gain steam as we moved closer to the opening bell. And here we have it. S&P 500 up 73 points to start the day, or about 1%. Dow Jones Industrial Average up 320 points. And the NASDAQ NASDAQ 100 up 548 points or 2% to start the day. Brent crude is down 1.5% at 89.35 a barrel. WTI crude now down 1.33% at 83.38 a barrel. The Bloomberg Dollar Spot Index is down about 1/3% at 1214.38. Yields are mostly lower. The 10-year at 4.65% and the 30-year at 5.92%, or rather 5.19%. The 2-year yield 4.21%. We've got our eye on Microsoft, up 11% after better than expected earnings after yesterday's closing bell. It also said that it is holding the line on AI spending, at least for now. By the way, Jersey Mike's rang the opening bell at the New York Stock Exchange. The sandwich chain going public today at $23 a share, giving Jersey Mike's a $7.3 billion valuation. That's your Bloomberg opening bell report. Tom and Paul.
And now we speak with Paul Sweeney, surveillance Jersey Mike's correspondent, a future member of the Dow Jones Industrial Average.
It could be. They make a good sandwich over there, Tom.
And what's really great, is it like a franchise thing where they're taking in like
totally
McDonald's franchise fees and all that?
Asset-light model, which Mike Halen, BI restaurant analyst, loves. Those are the best, most profitable models.
Very cool.
And that's what they do. And they got a good brand. And so there they go. Quality.
Paul Sweeney, the news you can use. There's
Exactly.
a headline just out. Microsoft jumps 12. What's it take to move Microsoft?
I know.
12%.
Biggest gain since 2020.
Since COVID.
Yeah. Wow.
We continue with Anna Wong. I want to do the why here, folks. This is important. Anna Wong stopped global economics, pushing on 3 years ago with her labor economics. It was absolutely exquisite. She drives all of our U.S. coverage with bulletproof academics out of Chicago, and we're thrilled she could be with us after her blistering LinkedIn memo yesterday. Anna, I'm going to go a little nerdy here, and then Paul's going to bring us down to common sense. The heart of the matter is the laureate Robert Lucas, who I interviewed many times out of Chicago, said we can't distrust our past information. And then others, including Richard Clarida, Gali, and Gertler, came out and said we have to do fancy models to try to get out front and look into the future. Are President Trump and Chairman Warsh dismissing our modern models that help us look out to the future?
Yeah, so Kevin Warsh has mentioned several times that he does not see a trade-off between inflation and unemployment and full employment. And you know, if you look at this lens, why he believed the way that he does from the Lucas critique, you can trace it back to Thomas Sargent, who is in his inflation strategy task force. So Thomas Sargent wrote a book on inflation, looking back at inflation in U.S. in the last 100 years. And he concluded that, in fact, inflation was not slayed, as most people believe, that in fact, Volcker did not slay inflation. And the underpinning technique that led him to that conclusion is the Lucas critique. He thinks that the Phillips curve has been moving over time. So you cannot simply run a scatter plot or a regression between the past inflation points versus unemployment, because in fact, people's are taking on the Fed's reaction function as they think about what the trade-off between unemployment and inflation. And hence, once he baked all this adaptive Phillips curve based on the Lucas critique into his model, he found that in fact high inflation could come back out again. So it is not due to a good monetary policy that inflation went away. It's just from a idiosyncratic.
Paul's got to bring us back to ground. Let me do one more Nerd Patrol question here, because I think it's really germane. How will that press conference in Warsh's distrust of models forward and of sophistication, how will the PhDs like Anna Wong at the Fed respond to this? The governors, Waller, definitive in game theory, Loretta Mester, formerly with Cleveland, scathing out on Twitter yesterday. How will the people like you respond to Warsh forward?
Yeah, I think we need to separate what Warsh wants, the objective, and whether there's reasons, justifications for what he's doing, versus how his implementing it in his rhetorical gymnastics. Because I think there is a strong case for what he's doing, the task forces. I personally know several people at the Fed staff who have long been suspicious of the Phillips curve. In fact, so it would be, they are very happy that Warsh would be bringing in someone like Tom Sargent to question the Phillips curve. They love it. But then there's also the rhetorical stuff yesterday, which makes it sound like he doesn't really know what he's doing. He could have explained all this in a very, very logical manner, and there would be a case for what he's doing and for holding rates constant, but he didn't, and hence the bond market revolted.
Anna, did he lose credibility with the marketplace yesterday? And if so, does that really matter?
I think he did kind of, but whether it matters, no, it didn't matter, because the economic outcome of the blowout and the long-term yield is that it is going to restrain economic activity within 3 months, and that will bring inflation down fast. So the economic reaction is as if a very, very hawkish thing just happened. And that is naturally going to rebuild the Fed's credibility. As long as inflation comes down, the Fed's long-term credibility will be intact.
Anna Wong with us. We're going to continue. Paul Sweeney with good questions. Microsoft up 12%, now up 14%. The Dow up 287 points. The 30-year bond, Anna Wong said she wouldn't come on unless I quoted it, 5.20%.
Anna, is this committee going to look back and say, man, July might have been the last realistic chance for us to hike this year?
Well, they certainly don't know that right now. And in fact, if you look at the commentaries from yesterday, many people are saying that given that Warsh has lost some credibility, he gotta really have to raise in September, and that the increase in 30-year implies that people are baking in more hikes over the long term. Well, I think that our team thinks that July is the last realistic chance to hike, because our forecast for inflation is that July will be another very soft print. There's an underlying coolness to the core. And in September 30th, BEA is going to implement some big methodological revisions on PCE inflation. That is going to bring core PCE down by another 0.2 percentage point. So I think and also with the long yields blowing out, economic activity was slow. GDP already disappointed to the negative side today. I think we are going to see more of these negative disappointment in the next couple of months.
Anna, how about Jackson Hole, the next opportunity really for maybe Mr. Warsh to have a huge platform? What do you expect from Jackson Hole next month?
Our team found it very incredible that he said he hasn't really decided what he wants to say, because usually it's a very drawn out and fuddy-duddy process. Every word is scrutinized in the speech. I think that suppose we take his word as face value. Right. I think that he's not ready. It is because the speech is contingent on the task force finding, and that's why it's not ready. Right. So I'm suspecting it'll be a lot about task force and some early findings of the task force.
And I just, once again, congratulations for your profound impact on economics. Just, I guess, one final question to stagger forward, and we all await you and your team's publications in the moment. Dow up 223 points. Dr. Wong, I look at this out of Chicago, out of Frank Knight and the revolution of Milton Friedman, what Randy Krosner and all did at the Booth School. We've got a Booth graduate coming up here in a moment. I look at this, Anna Wong, and go, is this just anti-economics? Is that really what we're talking about?
Anti-economics. I think but by the fact that the Fed hold rather than hike yesterday, it suggests that they are taking into account more economics than optics. I think in policy making, there is a temptation to focus on the optics. But at the end of the day, I do believe that economics is what matters at the Fed.
We got to run. Anna Wong, thank you so much. Bloomberg Economics worldwide. The Dow pulls back up 170. Yen spikes lower. Rumors of intervention. I don't have that in front of me, but the Japanese yen making a jump condition. Right to it from the Interactive Broker Studios, the Bloomberg Business Flash, Alexis Christophers.
And Tom, Wall Street is staging a comeback as dip buyers get to work after yesterday's sharp sell-off. Also, the day's economic reports showing a pickup in consumer spending and solid business investment last month, even as the economy grew at a weaker than expected pace in the second quarter. We've got the S&P 500 up 0.8% or 57 points. Dow Jones Industrial Average up 140 points or 0.25%. This is after sliding 2% yesterday or more than 1,100 points. NASDAQ 100 up 560 points now or a gain of 2%. Helping to lead that advance, Microsoft surging up 14% after reporting the fastest cloud growth in 4 years. Not participating in this rally, Meta Platforms down nearly 10% after giving a disappointing quarterly revenue forecast. I want to give a shout out to Lam Research, biggest winner in the S&P 500. The stock is up 20%, its biggest jump since 1999 after quarterly earnings came in above estimates. Sales were just in line. And Adidas getting tripped up on Wall Street today. The stock is down 17%. Quarterly profit lower than expected due to marketing spend for the Football World Cup. Also, all eyes on Apple and Amazon out with earnings after the closing bell. That's your Bloomberg Business Flash. Tom and Paul.
Alexis, thanks so much. Yen moves 3.7 standard deviations just to help people out, from up 2% to down 2% essentially there. We don't have any headlines on that yet, but we'll Paul will be all over yen intervention here into the 10 o'clock
on this morning.
hour. Sinjin Baran joins us, our high yield bond and senior bank loan portfolio manager, Beach Point Capital. Sinjin, with all of your academics in actually running bonds, how ugly was price down, yield up yesterday?
Well, good morning. Thanks for having me on. Yesterday was an exercise in just elevated uncertainty. And so while we traffic in a lot of different asset classes here at Beach Point, we're primarily using risk-free rates to price risk assets off of. And so when you get that level of volatility, it just makes it that much harder to do.
Sinjin, I'm looking at the INGO function on the Bloomberg terminal, the index browser. I'm looking at the fixed income space here in the U.S. Boy, a lot of red there, but a couple of seriously positive numbers there. Leverage loans in the U.S. and high yield. Talk to us about the riskier part of the bond market these days.
Sure. Well, we in leveraged credit have been dealing with a lot of dispersion for several years now, and it's now sitting at all-time highs. It's a little more acute in the loan market, and that's in large part because of the underlying buyer base in the form of CLOs. I would say it's kind of fitting now to see that level of dispersion sort of entering the dot plot in terms of forward-looking monetary policy and the volatility that could potentially induce. But yesterday's news, and then continuing to today and through the just the earnings that have been reported and that we expect, it really just is a continuation of more recent themes in that, we can't have Mag 7 reporting without, expectations of higher capital expenditures. That filters down to our market. We expect more supply in the form of project finance and data center construction. And then yesterday's decision or non-decision on the monetary policy front is probably good for floating rate instruments like bank loans, and particularly for the lower quality cohorts of the market, simply because their fundamentals won't deteriorate that much further, at least in the near term.
Across America, worldwide, Sinjin Baran with us with Beach Point Capital. For those in the Pacific Rim, maybe the yen, maybe BOJ, MOF, they intervene. Yen under a 161. It's gone 163 to 160 here. Headlines on supposed but not reported intervention. Paul Sweeney with Sinjin Baran.
Sinjin, what sectors are screening well for you guys these days, right now?
Well, right now, there's just a lot of credit being created within AI adjacent spaces. And this basically amounts to a lot of project finance and construction finance for data centers. We've shied away from a lot of that simply because the market isn't assigning enough price differentiation based on the nuance of these different structures. Instead, we are more drawn to the industrial supply chain that is also benefiting from that level of construction and that filter down of capital expenditures to our market. We also like aerospace and defense, given the geopolitical backdrop. And then we also like some areas of media, some areas of business services. We think there's going to be continued deregulation and potential consolidation within those spaces.
St. John, thank you so much. St. John Bowen with his Beach Point Capital. Paul, Microsoft up a bazillion points, like up 14%. Apple, I think, Paul, it's an opportunity for you. Apple is dipped under $5 trillion, 4.88 trillion is the market cap. It could be a buy opportunity.
I tell you what, how many times over the last year, 6 months at least, Tom, have you and I discussed saying, boy, you got to buy some Microsoft here. Stock's down 20, 25% year to date. Yeah. It's got to come back. This is Microsoft.
I would say
here it is.
Yeah, dead on. In our recent history, folks, I would say there was a flurry of like a 2-week period where 10 people must have come into the studio. And that was what they said.
Yeah, I mean,
that's unusual.
This is Microsoft, folks. It's no reason this should be down 25%.
But they were.
When the other tech names.
The headline here is they were responsible about CapEx.
Yeah.
Whether true or not, I don't know.
Yep. So stock's up 15% here today. It's rare to see that.
Do you have any of that Azure at home?
Azure.
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 Michael Barr, is that how you pronounce it? Azure.
I'll go with that. Yeah.
I don't know. No, I don't think so, but it doesn't mean it's not the case. I don't think so as far as
I have never seen Michael Barr not concentrate like this morning, folks, because Scooball of the Detroits, maybe he pitched his last game.
They gave him a standing O last night, and I think everybody knows this is going to be it.
Mickey Lolich never got that respect.
No,
he did not. Let's get to it. He's been a saint today with this news flow. With our news in New York City, here's Michael Barr.
Tom, Paul, Alexis, thank you very much. The U.S. and Iran have fired barrages of missiles as hope dim for any quick resolution. The U.S. military struck dozens of Iranian targets, including military command centers. Meanwhile, drone strikes caused fires on ships at an Egyptian port. Republican Senator Ted Budd serves on the Senate Armed Services Committee.
The president wants to have this over as soon as possible. I think all of us want this over as soon as possible. Look, he has attempted diplomacy repeatedly, and that is certainly the shortest way to resolve this. But Iran has been anything but sincere every time that we've come to the table.
Senator Budd, it comes as a new AP NORC poll shows about 2/3 of Americans say the war in Iran has not been worth fighting. And President Trump's approval rating on Iran has fallen since last month. The poll shows just 28% of U.S. adults approve of the president's handling of Iran. The Senate Judiciary Committee chose to postpone its meeting to vote on Todd Blanche's nomination for Attorney General. The decision reportedly comes after key Republican votes, including Senators John Cornyn and Tom Tillis, indicated they would not support Blanche's bid without written assurances from the Justice Department on President Trump's IRS settlement. Senator Cornyn.
As I told you earlier, it was not responsive to my concerns. I mean, we've heard from them. It's just that they refused to commit to writing what he testified to under oath.
A single Republican defection on the Judiciary Committee would block Blanche's nomination, as all Democrats are expected to vote against him. The fastest growing recorded Ebola outbreak has killed over 1,500 people in eastern Congo. Official data released today shows a 50% spike in deaths in about a week. Hope is dwindling for any rescue in southwestern Japan after Tuesday's 7.1 magnitude earthquake. Some reports say the death toll for now is at least 34. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom and Paul.
Michael Barr, thank you. Microsoft up 15%. Paul, I'm going to throw this out for history, and it's real simple. Was this a one-off, difficult, but shining moment for Kevin Warsh, in that we had a one-off shift in yields where now we will not be dot plot forward guidance, will be data dependent, and we could see disinflationary data forward?
I mean, we had a good inflation print today. So, I mean, if we get more of those,
Right.
Presumably, I'm reading some research right now. If we get a couple more of these,
right,
then let's just hold them.
Certainly, that's what Dr. Hassett would say at the White House. Something to think about, folks. A one-off move in bonds and then forward. Bloomberg's surveillance.
The news doesn't stop on the weekends, and now neither do we. This is Christina Raffini. Join us on Bloomberg this weekend. Watch and listen to our new show Saturdays and Sundays starting at 7 a.m. on Bloomberg Radio, TV, and the Bloomberg Business app.
You research your investments, you analyze markets, but have you researched your broker? For the past 3 years, Interactive Brokers' individual clients averaged a 24.3% annual return, beating the S&P 500. Lower costs, competitive rates, and access to 170-plus global markets help investors keep more of what they earn. The broker you choose matters. Interactive Brokers, member SIPC. Learn more at ibkr.com/performance.
Data storage used to be straightforward, but AI has rewritten the rules. The data it needs to thrive is trapped in aging infrastructure. In fact, less than half of enterprises report that their data is AI ready. That makes initiatives stall before they start. Instead of fragmented systems, companies need a unified data platform, one intelligent layer that delivers data at the speed of AI, because good enough isn't good enough in the AI era. Learn more at everpuredata.com.
Well, it's official. My friends have all switched to Pure Talk because I told them they could save a bunch of money on a super reliable high-speed network with unlimited data. And because they're my friends, they trust me. As for the rest of you, well, Pure Talk understands that even though you might like me, you're not just going to take my word for it, nor should you. For that reason, and for a very limited time, Pure Talk is offering any of their plans for just $15 a month for the first 3 months, including their top-tier unlimited plan that normally sells for $65 a month. Think of it like a test drive, a super simple way to save $150 while you kick the tires on Pure Talk's blazing fast network, and a fine way to see for yourself why I switched from big wireless, along with a few 100,000 of my closest friends. Dial pound 250, say Mike Rowe, and be connected to Pure Talk's friendly U.S. customer service team. Again, dial pound 250, say Mike Rowe, and let the savings begin.
Now, your 3-day weather forecast on Bloomberg 92.9.
More showers across the Boston area from time to time. There may be a thunderstorm as well. Temperatures will be near 70. Any showers end gradually overnight, lows 60 to 65. It'll become partly to mostly sunny tomorrow. There may be a shower in the afternoon, 75 to 80. Saturday, partly sunny, 80 to 85. Sunday, partial sun as clouds increase, 80 to 85. I'm Rob Carrollton with your weekend forecast on Bloomberg 92.9.
I'm David Weston. This week on Wall Street Week, Harvard's Jason Furman on the Fed decision. The European Union moves to reform its merger regulation, but will it get the tech industry going? Johnson & Johnson gets into the robotic surgery business a bit late, but with what it thinks is a better mousetrap. And what are all those think tanks doing?
Bloomberg Wall Street Week, tomorrow night at 6 at your number one source for news on the FM dial in Boston, Bloomberg 92.9.
Liberty Mutual customizes your car and home insurance. And now we're customizing this rush hour ad to keep you calm, which could help your driving. And science says therapy is great for a healthy mindset. So enjoy this 14-second session on us. I think you've done everything right and absolutely nothing wrong. In fact, anything that hasn't gone your way could probably be blamed on your father not being emotionally available because his father wasn't emotionally available, and so on. And now that you're calm and healing, you're probably driving better too.
Liberty, 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 liberty.
Join us for Bloomberg Power Players on September 10th in New York. Set against the backdrop of the U.S. Open Tennis Championships, Bloomberg convenes the leaders shaping the future of sports business. From athletes and team owners to commissioners and investors, hear the market-moving conversations driving the multi-trillion-dollar sports economy. Register now at BloombergLive.com/PowerPlayersRadio. That's BloombergLive.com/PowerPlayersRadio.
Get the news you need to start your day with the Bloomberg Daybreak podcast. Today's top stories with context, all in just 15 minutes. Listen to Bloomberg Daybreak each morning in your podcast feed by 6 a.m. on Apple, Spotify, and wherever you get your podcasts.
This
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. A special edition of Bloomberg Surveillance. I just got off the surveillance, excuse me, HP12C, 90-day, 6% nominal GDP.
There you go. All right, let's see what our next guest thinks about that. Cameron Kreis joins us here, macro strategist for Bloomberg News. Cam, you've seen a bunch of these Fed meetings come and go, different Fed chairs. What'd you make of yesterday?
Well, pretty interesting, actually. I mean, if you take Warsh's comments at kind of face value, it's like he wants to sort of delegate responsibility for adjusting financial conditions to the market rather than the Fed. Which I suppose, to a degree, is rational. I mean, markets should ultimately price based on the evolution of the economy and fundamentals. The risk, of course, is if that thing carries too far, then you can get misallocations of capital or mispricing, and what will ultimately be tantamount to a policy mistake. I mean, let's not forget that the Fed itself was created because the market was not efficient at allocating financial resources across the economy. But clearly, Warsh wants to take a step back in terms of the Fed's profile in determining the prices that we see flickering on our Bloomberg terminal screens, those of us who have one.
Do you think the Fed made the correct decision in not hiking here? Does the data support that from your perspective?
Well, I would say this. I would say based on what the reaction function implied by the June dot plot and forecast suggested, they were correct in not tightening interest rates, because the data that we've received since then has pointed to lower inflation. And you had a bunch of Fed speakers before the blackout period said, if inflation doesn't start turning around soon, we're going to need to hike interest rates. Well, the June data showed much lower inflation. Warsh is correct that sort of one swallow does not make a spring. But you know, in terms of the marginal change in the data did not point to needing to put interest rates up. So I think they probably made the correct decision in the context of the pre-existing reaction function. But I think you could also argue that given what's going on with inflation expected potentially not necessarily break-evens, but for private sector inflation expectations and the thirst for capital from the AI trade, that policy probably should need to tighten at some point over the next 6 months.
You're suggesting that even with any disinflationary tendencies, Morgan Stanley publishing moments ago on a disinflationary tendency, you still think a rate rise is possible, Cameron?
It's absolutely possible. I haven't seen the Morgan Stanley piece, but the disinflationary tendency of what? I think the argument is that in the near term, the intermediate term, say over the next 2 years, AI is inflationary. There might be a disinflationary payoff at some point in the future, but right now it's inflationary. And given the legacy of 5 years of swinging and missing on the inflation target, I think that has to be the primary concern, not some payoff in the distant future.
You're the best insight I saw, Cameron. He should have quit the press conference 5 minutes into it. Cameron Kreis,
totally.
Bloomberg Terminal. Thank you so much. Paul, did you survive the show?
Oh, sure.
I mean, it's nuts.
It's a lot going on out there. We're on top of it.
I mean, what is the amount of money that moves Microsoft 15%?
Just extraordinary. I mean, I think a lot of people were just looking for that one sign to get back in at a decent valuation historically.
BOS HD1 Brookline, Boston. WNBP Newburyport. Programming paid for by Bloomberg. Now, an update from our partners at ABC News.
From ABC News, I'm Sherry Preston. A new gauge of the prices we're paying, in part because of the war. The inflation gauge favored by the Fed shows prices 3.7% higher in June than they were a year ago. Here's ABC's Elizabeth Schulze.
We are seeing oil prices spike again as the war escalates. The national average for a gallon of gas now $4.08. That's back where it was in June before the ceasefire was announced. A year ago, about $1 lower than this. And a new estimate this morning from Moody's Analytics shows that the typical American household has now spent an extra $672 in gas, diesel, home heating, and jet fuel expenses combined since the start of the Iran war.
The nation's economy growing from April to June at an annual rate of just 1.5%. However, stocks are bouncing back this morning after the Dow had its worst day in more than a year on Wednesday. Overnight, U.S. forces striking again, and Iran aiming at bases housing U.S. troops as the relative lull in fighting appears over. ABC's Rachel Scott is at the White House.
Israeli Prime Minister Benjamin Netanyahu, who launched this war with the U.S., issuing this warning in an interview with our Lindsay Davis.
If Iran does strike Israel, how will you respond?
I think they'll make a terrible mistake, and we'll respond very, very forcefully.
Netanyahu has also been less optimistic than President Trump that a deal with Iran could ultimately be reached.
Republican Senator John Cornyn saying on his way into the Capitol today he's no closer to getting confirmation that the $1.8 billion anti-weaponization fund and protections for the Trump family from audits set up by the IRS will be scrapped. He says he needs that before he will vote to confirm Todd Blanche as the next Attorney General. Actor George Clooney now says he and his family were among the hundreds of thousands of people who had to evacuate in France ahead of raging wildfires. Dow's up 370. This is ABC News.
Now, your 3-day weather forecast on Bloomberg 92.9.
Storm system that brought the rain to the Boston area yesterday remains stationary over the New York and southwestern portions of Connecticut. That system is gradually going to head out to sea over the next 24 to 36 hours. That leaves us under a canopy of cloudiness through the rest of the day, along with the chance for scattered showers and maybe a thunderstorm this afternoon. It'll be near 70. Systems should move out into the Gulf of Maine tonight. Any showers will wind down. Lows overnight 60 to 65. High pressure builds in tomorrow. Will turn partly to mostly sunny. There could be an isolated shower tomorrow afternoon. Highs are 75 to 80. Tomorrow night, we're partly cloudy, 65. Weekend looks dry with partial sunshine in the forecast on Saturday. Highs 80 to 85. Sunday, we're partly sunny, but clouds increase in the afternoon. Sunday's highs 80 to 85. I'm Rob Carolyn, and that's your Bloomberg Weekend Forecast. Now back to the latest headlines from ABC News.
The family of Nolan Wells, the teenager who died after a night with friends at a barrier island off Mississippi on the 4th of July, has sued social media companies trying to get information off Wells's phone about him and his friends.
One of those friends who was there on Horn Island July 4th is taking legal action of his own against online personalities who he says defamed him by suggesting he's a suspect in Wells's death. Bart Edmiston said it has exposed him and his family to death threats.
That's ABC's Aaron Katursky. Public mistrust is growing against automated license plate readers, or ALPRs, and one of the companies that runs them. Here's ABC's Jim Ryan.
Flock is the biggest of the ALPR companies, and its CEO understands the public's privacy concerns. But
once they understand what the technology actually does,
Flock's Garrett Langley says,
most people go, this makes a lot of sense. I want my kids to be safe.
The latest headwind facing his company is coming from Washington. Congressman Thomas Massie of Kentucky plans to introduce legislation to defund any police department that uses license plate reading cameras. Jim Ryan, ABC News.
The sentencing hearing is underway for Colin Gray, who was convicted of second-degree murder and involuntary manslaughter for giving his son the semi-automatic weapon used to kill 4 people at Appalachia High School in Georgia 2 years ago. 2 students and 2 teachers. Gray is one of a handful of American parents who've been criminally charged after their children carried out school shootings. His charges, the most serious. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube, streaming live on Bloomberg.com as well. Markets rebounding today after yesterday's sell-off with the Fed announcement. Coming up here, Anurag Rana is going to break it down, some of these tech earnings. He's a senior tech analyst at Bloomberg Intelligence. We'll talk to him about Microsoft, and we got a lot of other earnings coming out there. We had Amazon and Apple after the close today. Tyler Kendall, Bloomberg News Washington correspondent, will get the latest out of the Mideast. Nancy Tengler, CEO and CIO of Laffer Tengler Investments, will join us to give her thoughts on the market. And then a good one, David Kirkpatrick, founder of Techomedy. He's the expert on all things Meta. Meta's selling off today while Microsoft's trading higher, giving that the divergent view of AI. So a lot coming up here today. Scarlett Fu and Paul Sweeney, and this is the Bloomberg Intelligence Program. Bloomberg Radio is introducing a new feature exclusively for Bloomberg.com subscribers and terminal clients. Participate in our wall-to-wall coverage of earnings today at 4 p.m. Eastern by submitting questions for our analysts and experts to answer live on air. Subscribers can go to Bloomberg.com/AskRadio to send in questions. Then listen on Bloomberg Radio and watch on Bloomberg Originals and YouTube at 4 p.m. Eastern. So some new stuff coming up. Some cool questions coming in. It's all good. You can participate. Right now, let's kick this whole thing off with John Tucker and a Bloomberg Business Flash. John.
All right, Paul and Scarlett, this Bloomberg Business Flash brought to you by IBKR. Trade, election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest in your position and receive $1 per contract if you're right. Learn more at IBKR.com/predictions. Well, as you said, Paul, after yesterday's Fed fright sell-off, major stock averages higher right now, and information technology, the best performing of the major industry groups in the S&P 500. From the semiconductor stocks getting a lift, Lam Research, for example, that's actually the best performing stock in the S&P 500 right now. It's up 22%. The semiconductor index, the SOX, up over 7%. Microsoft earnings, it looks like they got the memo on AI spending fears. That stock 15% higher. Mark Zuckerberg at Meta may not have gotten the memo. Meta is now down 9%. And if you've been asleep at the wheel, Amanda Agati at PNC says, the big theme for tech earnings should be pretty clear by now.
Investors really want to see an acceleration in revenue growth, and companies hold the line on CapEx. This idea that AI CapEx is going to continue to outpace return on invested capital, or however you want to describe it in terms of the metric, is just something that investors are really getting paranoid about.
S&P 500, 90 points higher, up 1.2%, 7406 on the index. The Dow, 326 points. That's a rise of 0.6%, 51,914 there. NASDAQ 100 up 772 points. That's a rise of 2.8%. Let me do yields after they popped higher from Kevin Warsh yesterday. The twos down right now 4 basis points, 422. The tens down a basis point, 466. 30-year up a basis point, 521. Can I just sit on the beach, read my books, collect 5.2% interest? Maybe.
It might go up even more.
Silicon Valley back on top as America's luxury housing market. The AI wealth and, the IPOs sending median home prices. Let's pick on Atherton, up 20%.
Awesome.
$10 million in the first half. This is the average. You got to be kidding me. The median home price, $10 million in the first half.
There are big houses out there, John.
Well, oh yeah, okay. So it's the most expensive zip code now, ahead of Fisher Island on Miami.
Yeah.
Yikes.
Palo Alto's right there. Beautiful. You can get into the city.
What's the mortgage? What's a 6% mortgage on $10 billion house?
Okay, my HP.
It's a jumbo mortgage.
Yes. We check the markets all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right, John, thank you so much. Appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Stocks are higher, as John is reporting, particularly the NASDAQ. Let's take a look at some stock movers out there. We can do that with Judy LaGrue. She's a reporter for Bloomberg News, joining us here in studio. Judy, what are you looking at?
Good morning, Paul. First, looking at Meta, ticker META, the stock is tumbling as much as 10%. It is on track for its worst day since last October, and it's on its 11th day of a losing streak that has not been matched since 2012. Wow. So this is coming after Facebook's parent company gave a revenue forecast that was disappointing to investors, but it also reported the lowest free cash flow in 4 years. The company raised the low end of its full year forecast for both CapEx and total expenses, adding to concerns about whether or not spending on AI will translate into better growth. Mm-hmm. And so, Evercore analysts specifically were noting the lack of clarity on CapEx spending. And we're seeing, again, sort of the tale of two cities here. We're getting a lot of really positive feedback, of course, with Microsoft and how it's really been able to take its cloud revenue and really increase it without taking its CapEx too high. But then Meta, on the other hand, it's really signaling ballooning AI expenses. So looking at that.
Yeah, it's an interesting comparison, Microsoft and Meta, and the messaging around that. We're going to have Anurag Rana in just a moment. He'll break it down for us from Bloomberg Intelligence. What's next?
Sure. Teladoc, ticker TDOC. The healthcare company's shares are slumping as much as 27% today, which puts it on track to reach its worst day in over 4 years. So this is the virtual health care provider that's behind the service BetterHelp. And analysts at Truist said that investor expectations were centered around signs of stabilization for BetterHelp, but instead the company meaningfully reduced its revenue outlook for the BetterHelp segment as the decline in U.S. cash pay business accelerated faster than anticipated. So Truist analysts are really noting that insurance growth for BetterHelp is not yet sufficient to offset the accelerating deterioration in cash pay the business is receiving.
All right. Last stock that you're watching, Judy?
Sure. Chipotle, which is right down the street from us, ticker CMG. The Mexican restaurant operator is rallying as much as 14%. It's on track for its best day since April 2023. This is coming after the restaurant chain reported comparable sales for the second quarter that beat analyst estimates. The company also boosted its annual guidance after bringing back its popular honey chicken. Has anyone here had it?
No, but I am a huge Chipotle fan. But I go, I'm
Sounds like Judy's like offering to go get lunch.
I mean,
3rd Avenue, 63rd Street. I mean, I'm just saying.
Maybe I'll bring it in.
Matt Miller is famous for that, for just doing a food run and bringing stuff in.
Oh, that's nice.
But I don't know where Matt Miller is today.
Matt Miller's on paternity leave, so it's going to be a while before he brings in food for us.
All right.
We miss you, Matt.
Oh, yes. Yes.
Very good. All right, Judy, thank you so much. Appreciate that. Judy LaGrue giving us the breakdown on some of the stocks on the move today. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Big moves in the stocks, as Judy was just mentioning, some of those tech names. Microsoft, okay.
Meta, not okay.
So much. So let's go to Anurag Rana, Senior Tech Analyst for Bloomberg Intelligence. Anurag, let's start with Microsoft here. Why is the stock up so much today?
I think it was down, I think, 40% over the last 12 or so months because of, just rising fears of CapEx and not translating into cloud growth. And I think that's a lot of that is what's driving this big rebound today.
But what's different between what Microsoft telegraphed and what Alphabet telegraphed? Because cloud growth was visible at Alphabet as well, but investors punished the stock.
I think it's, as I said, one of the most important factors is the relative valuation. Second thing is this, on an incremental basis, Azure growth was not improving as much as what we saw that Google is showing. Now, we did see modest improvement in Azure relative growth rate, and it's going to actually get even better next quarter. So I think everybody is saying that finally Azure growth is picking up, and at the same time they are being a little more responsible with their free cash flow. I think that probably is one factor that most people are not talking about, is even next year, next 12 months after they've spent all this money, they will still be free cash flow positive. So they are better managing this entire, you could say, blow up or build up than some of the other vendors that are out there.
So what do you think Meta has to do here, Anurag? I guess it's not enough to say, hey, our advertising business is doing even better because of some of the AI investments we made. What do you think they need to do here realistically?
They have thrown out a couple of things, such as, figuring out when they have those models, and then some, you can perhaps make some money off of it, but I am not even sure how much you can do that. The second option they're saying is, well, maybe we'll get into the cloud business and compete with some of the other ones. Now, over there, it's not going to be easy, because now you're, trying to compete with somebody who's been established for decades. So I think you find themselves in a very, very rough place when you're spending, hundreds of billions, and you have to figure out how to show that ROI. So the big question for them, everybody is asking. In fact, that was the question so much on the call yesterday about the discussion around ROI.
When it comes to CapEx, I just look at what Microsoft has done. There was a time when the CFO had pulled back on CapEx for a little bit, and that raised concerns. This time around, in the quarter that just passed, CapEx increased 70% to $41 billion in the quarter. Analysts had anticipated $42 billion, just coming in $1 billion lower than what analysts had expected. Is that something that Microsoft, kind of massaged, and investors see that and like it?
I think it was not just that. I mean, we have been calling for Microsoft to be a little more responsible for CapEx for the last several months. One of the things they did was they're basically saying going forward, they're going to be using, you could say, renting capacity a little bit more than building it themselves. And second, they also, increase the depreciation of that. So eventually what's going to happen is, just on the surface, that actual big number for the next 12 months is going to look smaller than what it is. But what it does is it helps your free cash flow. And that's something investors are watching very carefully.
So is Microsoft the stock out of the doghouse now? I kind of felt like it was in the doghouse.
It was in the doghouse, absolutely. As I said, I mean, the multiple compression has been so much. I've never believed it that, for a company growing this much, you could, basically completely get them out of the, you could say, run here. But, there are reasons to be careful when it comes to Microsoft also. I mean, everything is good. But the cautionary tale is that they don't have their own chips that are being sold at that, continuous rate as what we are seeing what's happening with Google and Amazon. Now, they have their own chips, but not at that same acceptance rate as the others. So I think that's really what they need to show also over the next 12 to 24 months, that customers are going after their own chips, because that actually helps reduce the CapEx quite a bit. Because right now, what are you doing? You're just going to NVIDIA and buying their GPUs and selling them back.
All right, Anurag Rana, thank you so much. Our senior tech analyst for Bloomberg Intelligence, joining us from Chicago. And to your point, Paul, Microsoft down 13% over the past 12 months, Meta down 23%, Alphabet up 69%. And of course, today that's flipped with Microsoft, the best performer, up 14.5% among the Mag 7 names.
Just amazing. So we'll keep on top of that. This is Bloomberg.
Breaking news first. The Fed decides.
No change in rates, 9 in favor, 3 dissents.
All 3 of those voting for an interest rate hike.
Where necessary and appropriate, we will not hesitate to act.
Reaction first to the Kevin Warsh press conference.
The market is trying to tell you the direction of travel is going to be higher.
I do think we do get rate hikes in September.
They're starting to migrate towards tightening policy.
For the latest headlines from the Fed, stay with Bloomberg 92.9.
This is a Bloomberg Business of Sports report. The European Commission will study FIFA's plans to raise external investment carefully, citing a ruling that sporting rules are subject to EU law when they produce economic effects. The plan has drawn anger from FIFA members and politicians, with UEFA considering a boycott of FIFA events. Meanwhile, FIFA President Gianni Infantino has set a September 19th deadline for the 211 member federations to accept a $20 million offer as part of a project to sell stakes in the World Cup to private investors. The FIFA subsidiary is bankrolled by the brother of Jared Kushner. Billionaire Larry Tannenbaum, who owns the Toronto Temple, is focusing on women's basketball after selling his stake in Maple Leaf Sports and Entertainment for the equivalent of almost $3.1 billion. The WNBA has seen growth in revenue and investor demand, with the average franchise worth $427 million. With a Bloomberg Business of Sports report, I'm Michael Barr.
Hi, how can I help? Well, my husband and I feel like we've outgrown our current money manager. I see. Our lives have changed, and we need something more than just mutual funds to help us in retirement.
She's right.
I hear that often. At Fisher Investments, we'd start by getting to know you, your finances, family, health, lifestyle. We tailor a portfolio around your goals and needs.
Sounds good.
Can you help with estate planning? Yes. We have a team of specialists who can help you with estate planning, Social Security, investment income, and more. We'll get to know your whole financial picture and help keep you on the path to a comfortable retirement.
And your fees?
We have a simple, transparent fee that's a percentage of the value of your portfolio. So we do better when you do better. I feel better already. At Fisher Investments, we're clearly different. Learn more at fisherinvestments.com/different. Investing in securities involves the risk of loss.
Hi, Jose Minchero here, Head of Portfolio Analytics Research at Bloomberg. Are you looking for a risk model that adapts quickly to today's volatile markets? One capable of providing accurate risk forecasts and efficient optimized portfolios, all while mitigating those pesky correlations between idiosyncratic and factor returns? If so, look no further than the Bloomberg Mac 3 risk model. Visit bloomberg.com/risk-modeling to learn more.
Now, your 3-day weather forecast on Bloomberg 92.9.
Scattered showers and maybe a thunderstorm this afternoon. Highs are only around 70. Any showers and thunderstorms in tonight, lows are 60 to 65. Clearing tomorrow, though there may be a shower tomorrow afternoon. Highs 75 to 80. Saturday, partly sunny, 80 to 85. Sun will fade on Sunday as clouds increase. Highs are 80 to near 85. I'm Rob Carrollton with your weekend forecast on Bloomberg 92.9.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. So yeah, investors are buying the dip today. The chip makers rebounding. Let's go through some of the chippers. Lam Research, SanDisk, CoreWeave, Western Digital, all leaders right now in the broader market. And of course, you're talking to Anurag about Microsoft. Right now, those shares up 14.3%. The cloud unit grew at the fastest clip in 4 years, and also forecast AI spending that's not necessarily going to break the bank there. Those gains, of course, overshadowed by the slide in Meta Platforms. They had the disappointing quarterly revenue forecast, and the spend also a concern on the CapEx on AI. Shares there, they are down 9.3%. And of course, investors' attention going to turn to the results from Apple and Amazon. Right now, S&P 500 up 88 points, a rise of 1.2%, 7404 on the index. The Dow Jones Industrial Average is up 337 points, a rise of about 0.7%. The NASDAQ 100, 828 points higher. This is a 3% rise for the NASDAQ 100. And in the yield space, the 2-year is down 5 basis points right now, 421. The long bond at 5.2%, pretty much unchanged right now. Jersey Mike's subs, the initial public offering drawing about 15 times the orders for the shares available. This is according to our sources. And they rang the opening bell for the New York Stock Exchange. It was Danny DeVito and Eli Manning.
Yeah.
Somewhere in my house, I have an autographed framed picture of Eli Manning.
Oh, boy, that's big.
Now it's relegated to like a back shelf somewhere.
Yes, exactly.
One day, maybe it'll be worth some money. But
Exactly.
anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Geopolitics, we're right back on the front and center here. The U.S. and Iran exchange airstrikes as fighting in a 5-month war flared up once again with hostilities now spreading across the Middle East. Let's get the latest reporting. We can do that with Tyler Kendall, Bloomberg Washington correspondent. She is down there in D.C. Tyler, what's the feeling here? Is there a big push for peace coming from the White House, from Congress, anywhere, or are we just kind of in this, I guess, stalemate here?
Paul, it feels like we're in a cycle of retaliation and strikes, though at the same time, this White House has repeatedly maintained that they would prefer diplomacy be pursued as the top option. But then we got new updates and headlines this morning after the latest wave of U.S. strikes in retaliation for the Iranian strikes against U.S. forces earlier this week. Iranian state media now reporting that this morning the IRGC targeted additional U.S. forces in both Kuwait and Bahrain. And as you mentioned, we're seeing the potential that the conflict could spread even wider as commercial shipping disruptions continue to extend beyond the Strait of Hormuz. Notably, overnight, we saw 2 LNG tankers hit off the Egyptian coast, marking the first such attacks in Egyptian waters since the conflict began back in February. Now, nobody's claimed responsibility for that particular attack, but there had been this heightened focus on the Egyptian Mediterranean coast, considering that we know that there had been heightened focus on Saudi Arabia trying to reroute shipping over there in a bid to avoid the threat from the Houthis in the Red Sea. So it feels like we are continuing to escalate further and further. But I will say that the White House, while some pretty tough rhetoric from President Trump, he has also said that we are repeatedly close to getting Iran back to the negotiating table. We just haven't seen that publicly quite yet.
I'm glad you mentioned the Egyptian waters in Saudi Arabia, because it definitely feels like this conflict is widening out. It's broadening out. Saudi Arabia, Iraq, Egypt, they all are involved in one way or another now. Are they playing a part, if any, in this supposed peace process, the diplomacy that the president says he wants to pursue?
Well, Scarlett, we heard from at least one regional mediator earlier today. That is Pakistan's foreign ministry, who, of course, has been absolutely key in the ongoing discussions. And the ministry said that there are talks happening behind the scenes between U.S. and Iran negotiators, though he didn't give us any further information beyond that, and that those talks are focused on reopening shipping in the Strait of Hormuz, because we know that that is the #1 obstacle at this point. Before we can even talk about what those potential talks would look like on curbs to Iran's nuclear program. We do know, as you mentioned, Saudi Arabia and Iraq. Saudi Arabia now getting a little bit more involved in the conflict than previously before, as U.S. and Saudi forces did team up earlier this week to hit what they say were Iranian-backed proxy sites in Iraq. So it's definitely something to watch as regional partners get more entangled into this conflict, and it continues to drag on now as we enter into the 6th month.
Tyler, are there any scheduled negotiations that we should be aware of, or is there really nothing happening at the peace table at the moment?
Well, beyond the comments that we got from Pakistan's foreign ministry, Paul, we don't really have much insight into what the dialogue looks like behind closed doors. Before the recent uptick in fighting that we saw this week, we had heard from the U.S. ambassador to the United Nations, Mike Waltz, say last week that talks were happening at both that more nuanced technical level as well as at the leadership level, seeming to imply that the negotiations were actively happening during that lull in the fighting after that nearly 14 days of consecutive strikes. But since this resumption of strikes today was really the first confirmation that we had that some sort of dialogue is happening. President Trump did tell reporters earlier this week that Iran was the one that requested the pause in the fighting, but then again, Iran was the one that restarted those attacks during that surprise strike on the U.S. base in Jordan earlier this week. So it's really difficult to pin down exactly where we stand in the diplomatic process, even as the White House says that's the option they would like to pursue without taking further escalation off the table.
All right, Tyler, thank you so much. Tyler Kendall, Bloomberg News Washington correspondent, joining us from the White House. That buzzing sound you heard in the background, I believe it was the lawnmowers over there at the White House. Yeah.
So no, I think that was a DeWalt drill, 22 volt.
Oh, okay.
Thank you.
That's all right.
Mr. Home Improvement.
Well, maybe they're tearing something down. That's
actually, there's a lot of construction going on, so that's a really good point.
Yep.
All right, let's move on now to our next investor who's joining us, Nancy Tengler, a friend of the show, CEO and CIO of Laffer Tengler Investments. Nancy, you just heard from Tyler what's going on in terms of the geopolitics. We know we had this landmark Fed meeting yesterday, which left reporters confused and to some extent the bond market confused as well. And then we have earnings, which are not as confusing, with Meta sinking and Microsoft rallying. From where you sit, what drives the long-term investors' take the most, the long-term investors' view of these three factors?
Well, Scarlett, you raised all the right points, and thanks so much for having me. Earnings are what matter at the end of the day. Geopolitical shock is, of course, a thing and difficult to navigate, but eventually the market becomes numb. And I think we're getting there again where, I picked up a Wall Street Journal from a week ago and it was like, we're in a ceasefire. And I thought, geez, I think we've had two since then. So as an investor, I'm going to be focused on the things that drive stock prices, and that is earnings. On the Fed, I'll just say this, having managed money through the Alan Greenspan years, we lived in a perpetual state of confusion, because when he did speak, we had no idea what he was talking about. He was intentionally obscure. Right. I think Kevin Warsh is shooting for that. It's going to take the market a bit of time to sort through it and make the adjustment. But the earnings that came out, and it's not just Microsoft, it's Lam Research, Starbucks and Chipotle showed the consumer is still alive. And then we got Quanta Services this morning, which shows data center build out is not dead. And I think that is all of those are important aspects of what has been what investors have been skeptical about and what has been hurting stock prices, especially the growthier names in recent weeks.
And just last night, Nancy, we had Meta and Microsoft report, and boy, their stocks are taking diametrically opposed reactions this morning.
Right.
What does that say about the AI trade in the marketplace these days?
I think, Paul, it says you have to be able to demonstrate that you can monetize the CapEx spend. Where investors are concerned, we do not own Meta. We do own Microsoft. I've been pretty vocal about being out of Meta for a long time because it's basically an advertising company. And so to sort of float this idea that they're going to lease or, rent out additional capacity, I mean, that's fine, but it doesn't go to strategy and long-term sustainable, growth drivers. So I think what you want to look for in this environment are the companies that are able to monetize. We're in an arms race. We know that. I think Microsoft's flat CapEx, which was reported as a decline, but it was really an accounting adjustment to the useful life of a data center, 15 years to now 25. I think the market was relieved by that. Personally, I think if you're going to compete, you got to spend money. And so I haven't been as alarmed as the market has by the CapEx spend, but you've got to demonstrate you can monetize it.
What we've seen as well with the S&P 500 kind of just bumping along is a stalling out in the big caps and, especially in some of the AI names as well. Small and mid cap growth stocks are getting a little bit of a turn in the spotlight here. How do you think about whether big tech growth, big cap growth is out of the picture? I mean, is it a temporary thing? Is it, a 6 month, 1 year kind of thing?
I think it's temporary, Scarlett. I mean, I don't know. I wouldn't say 6 months to a year. I'd say a couple months. I think, we get these movements of regression to the mean in the market. We get corrections every 12 months. This feels like that because without the earnings growth from technology, the market multiple goes up dramatically. And so I think that the story, at least for us, has been in the 90s, 95 to 99, you saw 60% cumulative earnings growth, but 220% stock price outperformance. This last 5 years, we've seen it's been kind of in equilibrium. So the market multiple hasn't really expanded. And I think you need to see that continue for some period of time before the rest of the market can take over. And I'm not convinced the rest of the market can ever take over. So we have an overweight in some of our strategies to technology, a market weight in others. We have been broadening out overweight in industrials and consumer discretionary over the last couple of years. But and that's important to do, but I don't think you can win without technology in your portfolio.
In that case, are data centers evil?
Are they evil?
Yes.
So I'm going to take the other side of that one, Paul. I know it's going to be really unpopular. Louisiana, a parish in Louisiana paid teachers $55,000. This was a Wall Street Journal story, not mine. $55,000 in bonuses, which was more than they make annually. thanks to data center revenues. Loudoun County property taxes have gone down 28%. Energy costs have gone up, but 16%. So I think there's a balance, and the companies are getting very smart about reusing water, which is a big deal in Arizona, where I spent half my life, where we don't have a lot of water and we got a lot of stuff going in, data centers, foundries. So I think they're getting smarter about that. And then the whole power generation aspect of it. I think we're going to find in a couple of years that we aren't talking about this anymore.
All right, Nancy, thank you so much. Nancy Tengler, she is, of course, CEO and CIO of Laffer Tengler Investments, joining us with her take on the markets. It's really notable, Paul, how much the Russell 2000 has beat the S&P 500 just in the past year.
Yeah.
Up 32%, 33% total return. The S&P up almost 18% during that same time.
Yeah, that's the broadening out the trade that a lot of people have been calling for, and a lot of people feel like that's a healthy, metric for the market. Mm-hmm. So we'll keep an eye on that. The S&P up 90 points here, 1.25%. So not nice rebound today. This is good.
Faster, smarter, better. This is Boston's best source for news on the FM dial. Bloomberg 92.9. Coming up, the latest market-moving headlines from Bloomberg. First, an update from our partners at ABC News.
ABC News, I'm Sherry Preston. The United States and Iran firing barrages of missiles at one another as hopes for a quick resolution to the war dim.
Sources say the president initially held off on a massive attack to pursue diplomatic talks, repeatedly claiming Iran wanted to make a deal. But all of that was upended when Iran launched an attempted surprise attack on U.S. forces based in Jordan.
ABC's Rachel Scott. A new estimate from Moody's Analytics shows a typical American household has spent an extra $672 in gas, diesel, home heating, and jet fuel expenses since the start of the Iran war. Last month, the Fed's preferred gauge on inflation, the personal consumption expenditure, shows a 3.7% jump in prices year over year. The U.S. economy expanding at a sluggish 1.5% pace from April through June. France giving the go-ahead for 84,000 evacuees forced out of their homes from a monster wildfire to return. This is ABC News.
Say goodbye to old school AM radio.
Listen to Bloomberg 92.9 for speed, analysis, and global context on the biggest stories. Your best source for news on the FM dial. Bloomberg 92.9. Faster, smarter, better.
Don't wait for headlines. Watch the news unfold in real time at Bloomberg's New Economy Forum, live from New Delhi, October 13th through the 15th, as global leaders come together to tackle the biggest issues shaping our future, from geopolitics and global trade to technology and the world's new balance of power. You'll have a front row seat to the conversations that matter most. Watch live at BloombergNewEconomy.com. That's BloombergNewEconomy.com.
This is a special alert to all Americans who own a vehicle with less than 200,000 miles with an auto warranty about to expire or with no warranty coverage at all. Due to a decline in the economy, CarShield is announcing a low-cost month-to-month vehicle protection plan that is now available to the public to save any driver out-of-pocket expenses on future auto repairs. Call now to find out how you can pay almost nothing for covered auto repairs. Yes, you heard that correctly. Pay almost nothing for covered auto repairs. An open phone line has been established for all drivers to call for a free quick quote. Call 800-478-6430 now. Drivers who are covered will not have to pay for covered repairs again. This protection plan is at an all-time low. Additionally, drivers who activate this vehicle protection today will also receive free roadside assistance, free towing, and car rental options at no additional cost. Call us for your free quick quote today. 800-478-6430. That's 800-478-6430. What do you have to lose? Call 800-478-6430. Again, 800-478-6430.
On a recent edition of the Big Take podcast, can we trust election prediction markets? Host Sarah Holder and Bloomberg investigative reporter Liam Vaughn dig into what can happen when prediction markets mix with politics.
When the Trump administration takes office, how does the regulatory approach to these markets change?
I mean, it's a complete 180. Essentially, the Trump administration comes in, they put their own people in charge of the various regulators, and at the CFTC, they get rid of all the Democrats and essentially put in some conservative commissioners who are predisposed to and are supporters of prediction markets. You know, essentially you see a real kind of shift in the administration's attitude towards these markets. And as a result, they explode.
In December 2024, the monthly trading volume on Kalshi was $226 million. A year later, it was $6.4 billion. At this point, how do Kalshi and Polymarket's approaches to political wagering differ?
Yeah, they're kind of the yin and yang of approaches. Kalshi has spent a huge amount of time and energy trying to position itself as the official market. It does KYC, know your customer. So anyone that signs up has to provide details of who they are, where they live. And so anything that goes wrong or any sort of attempts at manipulation, Kalshi should, in theory, know who's behind that. Polymarket is crypto first, and you don't need to provide your bank details. And essentially, you can do it all anonymously. You can see via sort of a numerical or a kind of username what that account is up to on a kind of rolling basis, but you just don't know who it is.
That's what's on a recent edition of the Big Take podcast. Listen to the full episode on Apple, Spotify, the Bloomberg Business app, or anywhere you get your podcasts.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. So the semiconductor stocks, some of the best performing shares as dip buyers jump in. Lam Research, best performing stock in the S&P 500. They delivered positive results. Shares of Lam right now up close to 22%. And Oracle gaining more than 8%, saying it had expanded a partnership with Google Cloud to bring Gemini artificial intelligence tools to its business customers. Right now, communications services, that's actually the worst performing major industry group in the S&P 500. We have the S&P 500 up 97 points right now, up 1.3%, 7413 on the index. The Dow Jones Industrial Average up 340 points, a rise of about 0.7%, and the Nasdaq 100 up 905 points, a rise of 3.3%. The Philadelphia Stock Exchange Semiconductor Index, that is up 8.8%. How's that for a little volatility? Meantime, Matt Miskin at Manulife says, you know what? Bonds are getting his attention.
If you can get 5 to 6% per year for the next 5 to 10 years, it's not bad. And we've got what's called real yield, John. It's been a while. This real yield after the inflation deduction is actually pretty compelling.
Let me give you the long bond quote, 30-year. Well, it's unchanged in terms of basis points right now, 5.2%. You know what? Employers are put in a weird position these days. They're not just scanning resumes, but they're using biometric devices and trying to identify.
What, scanning my eyes?
Yeah, all sorts of things. They're trying to verify applicants' identities. Biometric scans of their faces, actually. That includes your eyeballs.
Wait, to make sure that I'm the person, the person doing the interview?
Let me do the story,
okay, sorry.
and then you can ask all these annoying questions.
Okay, I'm raising my hand in the background.
So they're scrutinizing email histories, even examining the outlets behind them in Zoom interviews. They're concerned about applicants using stolen or fabricated identities to try and boost their chances of getting a job. So this one example, they uncovered a candidate using deepfakes to impersonate somebody else during a video meeting. In one case, a recruiter interviewed one person only to have somebody entirely different show up on the first day of work. It's pretty much how I got my job here. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right. Thank you for that, John Tucker. Looking at the markets right now, we have green on the screen in terms of equities, with the NASDAQ leading the way up 2.5%. Within the NASDAQ, one of the big decliners is Meta, although its losses have been moderating, I guess is the way to put it. It's down less than it was before. Meta currently down 9% right now. Investors not liking what they're hearing. So let's bring in David Kirkpatrick, founder of Techonomy, also wrote the book on the company formerly known as Facebook. His book was The Facebook Effect, the inside story of the company that is connecting the world. And David, you point out that Meta disappointing investors, not meeting financial expectations, even marginally, is a major change, because Mark Zuckerberg has run this company to consistently and relentlessly top investor estimates. What do you think is going on there?
Well, thanks so much for having me, Scarlett and Paul. Well, we are in an extremely precarious time for any of these tech giants with the scale of capital investment that they're throwing towards AI these days. And the precariousness of the moment is compounded in the case of Meta because, among other things, they're being sued right and left for many things, but especially for harming the mental health of teenagers. I mean, it was interesting that among the one analysis of these results yesterday was that if they hadn't set aside $2.4 billion for legal contingencies, they would have made their earnings number, which they missed. So that's $2.4 billion for most companies would be a really serious problem that you're expecting to pay that kind of money out because of legal settlements. For a company with $60 billion in profits annually, that's not so huge. But it just goes to underscore the complexity of this company's position in society and business. So that they continue to say they're going to spend 130 to 145 billion on capital expenditures for data centers this year. So, wow. That's all I can say.
Yeah, David, it was interesting last night for investors, the comparison, the compare and contrast of Microsoft with their results and the stock trading up dramatically today, 14-15%, and yet Meta down about 9%. What is Meta's AI strategy, do you think?
Oh, that's a great question. And I think a lot of analysts on the call with Zuckerberg yesterday would have liked to have gotten an answer for that. I mean, for example, recently Bloomberg broke the news that they were considering renting out data center capacity to other companies like possibly Anthropic or OpenAI, which they haven't yet done, and he didn't say anything about it on the earnings call yesterday. If they did, that would be a good way of monetizing these extraordinary capital expenditures. So far, Zuckerberg keeps making funny noises about, hey, we probably have enough uses for this capacity ourselves. That wasn't a clear answer. They have begun charging money for a lot of things they never charged for before. So you can now pay $50 a month and get access to a human if you have a problem with your Instagram. If you don't pay $50 a month, good luck on that. But the answer is, I don't think they fully know because I think they're waiting to see how the whole industry settles out. But I do think that Zuckerberg published a very strident and optimistic op-ed in the Wall Street Journal this week talking about he believes personal superintelligence is going to be the transformative force in the world, and people have to have individual access to that, and big companies can be gatekeepers into that sort of capability. So if you read between all these lines, I think their strategy is they want to more or less compete head-to-head with companies like OpenAI and Anthropic by using advertising to subsidize the offering of free AI services that they believe ultimately will go to individuals all over the world to enhance their lives. That's a long-term statement, but I think that would be a summary of how Zuckerberg thinks about it.
And does Zuckerberg and Meta have the track record for that? I mean, it does selling ads very well, but does it do other things just as well?
No. In fact, it has never done anything well aside from sell ads. It's never had a growing business of any size that really wasn't ad-based. I mean, they had $60.5 billion in revenue and $59.3 billion of that was advertising this quarter. So, but ads can be used to pay for a lot of things. And I think that's what I was trying to say before, that, we've seen OpenAI, for example, talk about how we're going to try to become an ad company. They can do that, and they're already doing it a tiny bit. But really, that's a really hard transition for a company like that to make. It is the easiest thing. Zuckerberg and Meta are in some ways, the world's best advertising-based company. And as they grow in other areas, if they can continue to use that core competence, it could be a tremendous asset in expanding out in the AI arena. Right now, they're just using AI to make the ads more seductive and their services more addictive. And I mentioned when I sent you a note earlier, I think it's highly ironic that they're being sued for making young people's lives worse because of the addictivity of their services. And yet what they're spending all their AI money on right now is making their services, in effect, more addictive. So they're paying all this money to make their services do more of what they're being sued for in some weirdly ironic way.
David, thank you so much for joining us. Really appreciate it. David Kirkpatrick, founder of Techomedy, joining us here. I mean, just look at the CapEx for Meta. Over the last 3-4 years, it's kind of 30 billion to 35 billion. This year, 136 billion. Next year, 184 billion. And I think investors are just saying, is this quintupling of your CapEx just to support your advertising business? Are we going to get a return on invested capital on that?
Yeah, and what is that going to look like, right?
There's got to be something else out there that you're spending all this money on. You don't have a cloud computing business per se, so it's just, like Azure does, like Amazon does. So that's, I think, what
it's got to go somewhere.
Yeah, it's got to go somewhere. So anyway, their stock is down today. We'll have more coming up. This is Bloomberg.
Now, your 3-day weather forecast on Bloomberg 92.9.
Low pressure drifting across New England, resulting in some showers this afternoon and maybe a thunderstorm. We're close to 70. Showers end tonight, 60 to 65. High pressure heads our way tomorrow. We'll see some clearing, though there may be an isolated shower tomorrow afternoon at 75 to 80. Saturday, partial sun, 80 to 85. Some sun on Sunday, but it will fade as clouds roll in. I'm Rob Carrollton with your weekend forecast on Bloomberg 92.9.
Big Tech reports earnings.
Microsoft, everything is in the cloud growth, better than expectations.
Azure revenue surpassing $100 billion.
And Bloomberg brings you the headlines first.
Meta Platforms did miss estimates.
There wasn't much of an upside when it comes to the top line.
For breaking earnings news and expert analysis.
The AI euphoria is being questioned across the board.
Listen on Apple CarPlay or Android Auto with the Bloomberg Business app. And always on Bloomberg 92.9.
Data storage used to be straightforward, but AI has rewritten the rules. The data it needs to thrive is trapped in aging infrastructure. In fact, less than half of enterprises report that their data is AI ready. That makes initiatives stall before they start. Instead of fragmented systems, companies need a unified data platform, one intelligent layer that delivers data at the speed of AI. Because good enough isn't good enough in the AI era. Learn more at everpuredata.com.
Man, I love this place. I've been surfing here since I was a kid. Now, seeing my grandson out on the water, it means everything to me. Watching him and taking in the blue waves, the sea breeze, the blurry horizon.
If you have geographic atrophy, or GA, subtle changes in vision could mean it's progressing toward irreversible vision loss. Izervay is proven to slow GA progression and could help preserve your vision for longer, so you may keep seeing the world around you. Izervay, or avacincaptad pegol, is an eye injection. Don't take it if you have an infection or active swelling in or around your eye. Izervay can cause eye infection, retinal detachment, or increased risk of wet AMD. Izervay may cause blood in the white of the eye, blurred vision, or a temporary increase in eye pressure. Do not drive or use machinery until vision has recovered after an eye injection or exam. Ask your retina specialist how you can slow your GA with Izervay. To learn more, call 1-855-IZERVAY or go to izervay.com. Paid for by Astellas Pharma.
The entertainment business is changing fast. At Bloomberg Screen Time, we'll bring together the executives, creators, investors, and entrepreneurs shaping what's next in Hollywood, music, sports, and gaming. We'll talk about the biggest stories in media, like the merger of Paramount and Warner Brothers, the booming live events business, and the potential impact of AI. I'm Lucas Shaw, and I'll be hosting Bloomberg Screen Time in Los Angeles September 30th and October 1st. Join us and request your invitation today at bloomberglive.com/screentime/radio.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Tom Keane, Alexis Christophers, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. JMKE, that is the ticker for the new IPO. Jersey Mike subs Priced the deal last night at $23 a share. I think that's somewhere kind of in the range there. And it's set to start trading today. Let's see what's going on with that stock and kind of what the pipeline's looking like. We can do that with Anthony Hughes, Bloomberg's equity capital markets reporter. So how did the pricing go last night? And how was it relative to the range and all that stuff?
Yeah, well, the Jersey Mike's IPO priced at the midpoint, which was $23, and it's indicated to open around that level. I think there was a lot of valuation debate, and the price range that was marketed with the price range of 21 to 25. So it was that wide range sort of implies that there was going to be a bit of a debate about how much this company was worth, and it actually was marketed at a premium to some of the comps, including Wingstop, and some people thought that was a little bit generous. You've got a situation here where this is a company that was bought by Blackstone in early 2025, and they're already looking to take it public and crystallize some gains. And they also took out a dividend prior to the company going public, which was about $500 million.
That's smart.
So Blackstone doesn't do badly out of this process, even though on the face of it, it looks like the IPO valuation is not too much higher than the price at which they paid for it.
Clever. You mentioned that Blackstone is going to crystallize some of its gains, not all of its gains, right? It's still holding on to a stake.
Yeah, it's still going to be a major shareholder. So obviously, when sponsor-backed companies go public, the investors like to see that the sponsors don't cash out entirely, and they generally are okay with sponsors selling some of the shares if in certain situations. I mean, ideally, most IPOs would be all primary, not too much secondary. As we've discussed before, this company is a franchise-based business. It doesn't have a huge amount of need for capital. So in some ways, this IPO is driven by Blackstone's priorities. But the company is growing well, and it's got big expansion plans in the UK, looking to build, to open a 300 odd stores in the UK, which is a big part of the growth.
Man, that would I'm just trying to think. Every block in London has the Pret a Manger. Every block. Put a Jersey Mike's next to that. Oh my God, they're gonna freak out. All right, so here in my IPOs, no primary sellers, none, not allowed. Blackstone's a little bit different. I probably can't push them around too much back in the day.
No, so I think they call the shots more than others.
Stock, I guess they're going to. Mike Halen's out with research from Bloomberg Intelligence. He's saying it's a premium multiple to the comps, but their same-store sales are running faster than some of the comps as well, so maybe that's worth it here. How important is this to Blackstone? I mean, to get a good open trading here today, because there's such a monster account out there in the marketplace.
Yeah, well, Blackstone has said that this is the year of the IPO, which has been true to an extent. I mean, they have taken a company called Liftoff Mobile public already this year, and also they took public their own data center investment vehicle. But they had several portfolio companies which have filed to go public and haven't yet gone public and seem to have been delayed. A company called Encore and another one called Entrada. And, they're looking to take some other companies public. But, obviously private equity firms are looking to get some realizations under their belt in what's been a bit of a tough period. And some of these IPO plans and monetization plans for a lot of these portfolio companies have been deferred in this environment in the last year or two. So, it is important for Blackstone to have a good outcome here. I think the issue here is that the IPO market as a whole is tough post SpaceX, and this is indicated to open pretty flat. I mean, it may be that people don't have a lot of patience here if this doesn't come out of the blocks good, it's always a possibility that it can trade down. A lot of recent IPOs have traded down, and it's been pretty disappointing.
And you talk about recent IPOs, there's also been like food and beverage retailer IPOs that have not done particularly well. I mean, on the one hand, Jersey Mike is not a tech name, so you can just steer clear of the whole AI narrative, but peers in its space haven't necessarily had great debuts.
Yeah, I mean, the consumer sector as a whole has been underperforming the S&P 500 this year, which is quite ironic given that, the bankers are looking to move away from the AI adjacent IPOs here a bit and offer something a bit different to the investors. But, there's a big question mark as to whether consumer IPOs really are going to do well in this environment. But, I think investors are looking for something a little different, and this company is growing well within its space. And it has some good numbers looking out for the next year or two. I think the problem with a lot of these sorts of consumer IPOs is is, they're doing well at the moment. How are they going to do in 2 or 3 years' time? It might be a little bit of a different environment. But this IPO was pretty well supported. It was 15 times oversubscribed, and 20% of the orders got zeroed out, which on the face of it sounds really positive. But, we did hear separately there was a fair bit of hedge fund interest in it and less sort of excitement from the long-only side. So you have to take that into account, that, there is a bit of nervousness about how this will actually perform.
All right, very good. We'll see. It's kind of indicating around 23, right where it was priced. So we'll see if it opens up. Usually around noonish, I guess. I don't know. Anthony Hughes, thanks so much for joining us. Anthony Hughes, Bloomberg U.S. Equity Capital Markets reporter. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment. Looking at the trading in the market here today, we are trying to claw back some of those losses from yesterday. The S&P is up 72 points. That's about 1%, and the Nasdaq's up 545 points.
But you see the bond market extending the action from yesterday.
Exactly. I mean, the bond market's telling you, the 30-year Treasury's up another basis point, 5.21%, while the short end, the 2 years, down 4.5 basis points. So
yeah, I mean, people still digesting what Kevin Warsh said, or in most instances didn't say at yesterday's news conference.
Yeah, a lot of frustration from some folks out there, but that might be the new way.
This is WBOS HD1 Brookline, Boston. WNBP Newburyport. Bloomberg 92.9. Programming paid for by Bloomberg. This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and John Tucker. We've got a lot to get to in this second hour of the program. We're streaming live on YouTube. We're going to talk to Ira Jersey, our chief U.S. interest rate strategist, on the moves in the bond market after Kevin Warsh's second time helming the FOMC meeting. There's a big spike in the 30-year yield yesterday, and it has extended into today. Mark Gurman is our managing editor for Global Consumer Tech. There's a small company named Apple reporting earnings after the closing bell, and he will give us what he'll be looking for in those results. Eric Balchunas, our senior ETF analyst for Bloomberg Intelligence, has an alternative for you if you want to steer away from the AI trade. He says you can go look for an alternative in the trash. He'll explain all of that. And Shiv Verma, the CFO of Robinhood, will be joining us in studio to give us his analysis on Robinhood's latest quarter. Just a reminder that Bloomberg Radio is introducing a new feature exclusively for our .com subscribers and terminal clients. You can participate in our wall-to-wall coverage of earnings. And today at 4 p.m., for instance, we've got a bunch of companies reporting by submitting questions for our analysts and experts to answer live on air. Subscribers can go to Bloomberg.com/AskRadio to send in questions, then listen on Bloomberg Radio and watch on Bloomberg Originals and YouTube at 4 p.m. Eastern. Reminder that Apple will be reporting at 4:30 p.m. this afternoon. All right, let's head over now to John Tucker for a roundup of the latest business news.
All right, and there's a rebound in semiconductors that's helping lift the major averages. Lam Research, one of the best performing stocks in the S&P 500 after their earnings results. Lam up close to 22% right now. You mentioned it, Scarlett, with all the recent worry over AI spending, they kind of look like geniuses at Apple. But the iPhone maker's earnings after the close could remind investors of some of the hurdles that it still faces. Apple shares have been on a roll, 15% rise just in the month of July. 22% overall this year. Oil and gas companies also set for a blockbuster earnings season, helped by energy prices. Energy companies estimated to report a 129% jump in second quarter earnings from a year ago. This according to all the data compiled by Bloomberg Intelligence. Meantime, Barbara Reinhardt at Voya Investments says the higher bond yields, they're going to eventually weigh on stocks.
We do see on some of our forward-looking indicators that inflation should be rolling over. Income growth is starting to slow. Consumer spending is starting to slow. But the fact is it may not be fast enough to stop probably more equity market weakness as a result of bond yields climbing.
Okay, the long bond will do that. Up almost 2 basis points right now, 521. Dow Jones Industrial Average up 160 points. That's up 0.3%. The S&P 500 up 69 points, up close to 1%. The Nasdaq 100 up 766 points. Now that is a rise of 2.8%. So the days of stumbling across a cheap seat on the airlines, that may be over. Airlines have long relied on analysts to devise the pricing rules, so they increase fares by 20% once a flight is quarter full. Now, thanks to AI, that's letting carriers change seat prices more quickly.
Dynamically.
So, yeah, they're weighing a bunch of variables in real time, squeezing more revenue out of every flight.
I know. Big sigh.
Yeah. Anyway, we check the markets and other stuff right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett Ball.
That other stuff is such a bummer.
It is. I don't know. I'm only flying if people pay me to fly. That's the new policy.
Did you know that he's a United
million-mile
flyer?
No, I only get reminded of that every other second.
Every time there's an airline story, we come back to it. John, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube and Bloomberg.com as well. So John was just reporting. We got some green on the screen after yesterday's pretty dramatic sell-off here. Let's take a look at some of the stocks on the move today. We can do that with Judy LeGros. She's a reporter for Bloomberg News. Judy, what do you got for us today?
Sure. It's generally a really big day for earnings today. We've got about $8 trillion in earnings for the S&P 500 coming out today alone. So much to talk about. I will start with Yum Brands, ticker YUM. Shares are trading higher as much as 9.4% on the day, and it is on track for its best day in 18 months. And this is coming because of news about Taco Bell. The business is starting to recover from the Cyclospora parasite outbreak linked to tainted lettuce. And Taco Bell's quarter-to-date comparable sales are down 2%, which was certainly better than the market expected, and it has improved over the last 10 days. One thing I thought was interesting is that Taco Bell is the fastest growing brand in the company's portfolio. So this is a company portfolio that includes KFC and soon to be sold Pizza Hut. CFRA analysts called Taco Bell, quote, the most important segment in the business post Pizza Hut, and that acceleration in comp sales is the key positive surprise in this quarter for the company. So space to watch.
Space to watch. Right on Lexington Avenue between.
Yes.
It's
another eatery near us.
Boom.
Yeah.
Yep. Opened recently.
Outside of earnings, there is some M&A on this Thursday.
That's right. Market Access Holdings, ticker MKTX. The shares of the company are soaring as much as 30%, and that puts it on track to reach its highest intraday jump in nearly 18 years. This is October 2008. The stock year to date, though, is down 10%, and this is coming as a result of M&A activity. The parent company of the New York Stock Exchange, Intercontinental Exchange, agreed to buy Market Access Holdings for about $6 billion in cash. So this is adding to one of the world's biggest sort of trading platforms. We're adding a fixed income exchange, and particularly around corporate bonds. So definitely a space to watch with respect to the M&A activity. Intercontinental Exchange itself, ticker ICE, is down about 1%. So not much movement there.
All right. Carvana,
ticker CVNA, shares are falling as much as 15%. It's on track for its biggest intraday drop since January and its worst day since last April. The shares are down about 29% year to date, and we're continuing to watch Carvana. We've been talking about it on the show today. The full year forecast had a midpoint below analyst estimates, and William Blair analysts called the wide range of profit growth forecasting as particularly complexing. I think that a lot of analysts are really just trying to figure out like what the deal with Carvana is. The stock is quite volatile. The company is sort of really not giving very clear signals to the market about its revenue and its profitability. So watching that space as well.
All right, Judy, thank you so much. Judy LaGrue is Bloomberg News reporter here with our Stocks on the Move. And for more conversations like this, be sure to subscribe to our Stock Movers reports, 5-minute audio reports on the biggest winners and losers in the stock market. It's available on Apple Podcasts, Spotify, or anywhere you listen. Some big news. A redhead, as we like to call it here at Bloomberg. UEFA members have agreed to boycott the World Cup. This is massive.
What does that mean?
Well, they're going to not participate in the World Cup if FIFA, which is the governing body of global soccer, proceeds with this plan to sell a stake in its media and commercial businesses. It's a nonprofit FIFA, but it's going to spin off this arm to monetize, the media rights that it has, and the World Cup and other events that it hosts.
Okay.
And some investors, like Jared Kushner's brother, Josh Kushner.
Oh boy!
So he's got ties to the Trump family. Invest in a stake, and where our reporting has shown that Thrivent, which is run by Josh Kushner, is one of the interested parties.
Interesting. All right, there you go.
So UEFA members are obviously the European football body, and FIFA is the global soccer body.
Boy, look at you!
I did a lot of reading on this because it's so interesting. It's like a big family fight.
We learn something every day, don't we, John?
All right. Well,
but FIFA's not interested in making money.
No, FIFA's very interested in making money.
Yeah. Well,
our next guest might be able to help on this.
Yes. Ira Jersey knows a thing or two about soccer. He also knows a thing or two about family fights, speaking of which, because we had this Fed meeting yesterday where officials voted 9-3 to hold rates unchanged. And during the press conference, Fed Chair Kevin Warsh insisted that this decision to leave rates unchanged was not a sign of inertia at the central bank.
Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. I asked for a good family fight and I got one. I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. In the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic.
Kevin Warsh there, the Fed chair, speaking yesterday. All right, let's bring in Ira Jersey. He is our chief interest rate strategist here at Bloomberg Intelligence. Ira, the bond market reacted pretty dramatically to what happened yesterday. You had the 2-year yield falling, the 30-year yield spiking, and those trends continuing today. Warsh has said he wants to get an unfiltered message from the markets. What is the message that the markets are sending?
That the market doesn't know how to react to this. And I think that that's one of the biggest, fallacies in what Kevin Warsh is trying to do, because it's very circular logic here, where he says, look, we don't want to give forward guidance, and we're not even going to give our reaction function, like what we'll do if certain things happen. And because of that, the market has to adjust. So the first thing that you saw, like you noted, the long end sold off pretty dramatically, and that will probably continue to be a little bit of a theme. We could see higher yields, particularly in that 30-year part of the curve. I think in large part because the market has to put in risk premia because it doesn't know what the Fed's going to do in the next 4 or 8 years, however long he happens to be in office. Now, the front end rallied mainly because there were people who thought that the Fed might have hiked yesterday, and in fact, there was about a 30% chance going in of an interest rate increase. So that front end rally was all basically academic and just saying, okay, they didn't hike this time, we have to rally the front end, let's see what they're going to do in September.
And Ira, we got some pretty tame-ish inflation data today with core PCE. Maybe the Fed can just sit on their hands here. I don't know. What do you think?
Yeah, well, our call has been that they would do nothing, that they would basically be on hold for the rest of this year. It's not impossible that the Federal Reserve does something, but if this data continues on trend in July and August, and we wind up seeing a continued moderation of inflation, then the likelihood that they are on hold in September goes up very dramatically, and I suspect that will ultimately be the issue. I think also the other thing to consider here, Paul, is that Kevin Warsh has focused very much on inflation during his talk, but when you listen to other members of the Fed and when you just consider who they are and what they've said in the past, they will take the dual mandate into account. So you can't completely discount the jobs numbers and only focus on those inflation data. So keep that in mind too. And of course, we do get another data print next week that could wind up moving the market pretty dramatically in the wage and jobs data.
Okay, Ira, before we let you go, we need to lean on your soccer football expertise. The UEFA members agreeing to boycott the World Cup if FIFA proceeds with plans to sell a stake in its media and commercial businesses. This is groundbreaking, isn't it?
Yeah, it's really interesting. There's been this growing pressure between UEFA and FIFA over time. Things like the Club World Cup, for example, because UEFA's worried that something like a FIFA tournament, like the Club World Cup, could eat into their cash cow, which is the Champions League, which is the tournament that all of the best clubs from all around Europe play in. And that's really where UEFA makes their money and where a lot of their clubs make their money. So I think UEFA is just worried that they'll be marginalized because they have their own tournament. Right, so this all started in part when FIFA suggested maybe we'll go to a World Cup every 2 years instead of every 4, and UEFA really pushed back against that as well. So, but this is major, right? Like we've never seen a whole confederation boycott a tournament. I mean, that's pretty impressive.
All right, Ira Jersey does the interest rate thing. He does the soccer thing. He
can cover it all.
But we only pay him one salary though, so we kind of get we work him twice as hard.
We get buy one get one free.
Yeah, we get some good value from Ira. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Lots of earnings after the close tonight. Our good friends at Apple are reporting, and boy, the stock's been trading really well. And maybe let's just take it slow on this whole AI thing. Maybe that's paying off here. They're not out there spending the gobs of money that a lot of these other companies are. Mark Gurman joins us, Bloomberg News managing editor for Global Consumer Tech. Joins us here in studio. Is usually based out there in Los Angeles. Mark, what do you think the expectation is? What do you think the company wants to convey tonight on their earnings call?
Well, this is going to be Tim Cook's final earnings call.
Really?
This is going to be his final earnings call. Yeah.
Wow.
We are going to be getting earnings results for his final full quarter in charge.
Okay.
The transition happens
Very cool.
2/3 of the way in through the fourth quarter, which obviously we're already in.
Okay.
Right? Runs through September. So today you're going to hear a lot about probably Cook legacy, Cook looking forward to Turnus taking over as CEO, them presenting this continuity message, talk about how they're going to continue to run the company financially and operationally the same under the new CEO. So essentially trying to use this as a sort of a jumping off board for this transition, but also to talk about how this is happening at an extremely opportune time. Obviously, they just were floating around a $5 trillion market cap.
Yep.
They launched this new Apple Upgrade subscription service, which I think is a blockbuster, and it's going to transform the company and enable its next multi-trillion dollars worth of growth on their market cap. And so they're going to have a lot of praises to sing. They're going to demonstrate a lot of stability. The one knock that you're going to hear on this call is obviously about the memory shortage. They just raised pricing, so that will be the one headwind we hear about. But in terms of the Wall Street numbers, I'd be shocked if they didn't meet the expectations.
No, they're very good about making sure they do just that, Mark. Since this is Tim Cook's last earnings call and earnings meeting with everyone, are they going to hold off on making any announcements, or are they going to try to squeeze something in so that John Turnus starts off with a brand new clean slate, or will John Turnus try to announce new things when he does take over the earnings call next quarter?
Are you talking about products?
Yeah, products or any kind of announcement, really.
So this is all timed for Turnus. He's taking over September 1st. They're going to hold their next product announcement about a week and a half after that. And so he'll be there. He'll do the whole thing. He'll introduce the first foldable iPhone, introduce some new Apple Watches, perhaps a new home device. So this is going to be a pretty significant product announcement series of launches for them that Turnus will be at the forefront of. And that's all about a month away.
30 seconds. Just explain what the subscription product is that you're talking about that could be a game changer. Explain what that is.
So it's a new program. It's called Apple Upgrade, and it's like leasing a car.
Ooh.
Instead of buying the phone outright or an iPad, Mac, Apple Watch, and other Apple devices, instead of financing it, so paying off the cost over payments, it's a lease. So for a phone, for example, $35 a month for an iPhone 17 Pro Max, you pay the $35 a month in perpetuity, and you continue to get new versions of that phone model every year.
But you never own it.
You never own it. And if you want to own it, you have to pay it off. Just like with the car, the lease payments are not the car's total cost broken up. It's obviously a percentage of what the car's value is, and then you buy off the car when you want to keep it, or you can trade it in for a new model. But the difference with the car lease payment, there's no drive off with the Apple product. There's no money down. So I think it's a great program. Financially, you're probably better off buying it outright and then selling the phone whenever it's time to buy a new one. But most people are not going to do that. So for 99.99% of people, this is going to be a big hit. And it's the biggest change to how Apple sells products ever.
Right. And you wonder whether they're going to extend this to other products in the Apple universe as well.
Wow.
Mark Gurman, thank you so much. Mark Gurman is our managing editor for Global Consumer Tech. He will be all over Apple's earnings later on today when they announce at 4:30 p.m. Eastern Time. Let's go back to the big headline that we were just talking about. UEFA members, and this is, of course, the European body that governs football, has agreed to boycott the World Cup. There's a lot of conditions here. So I want to bring in Randall Williams. He is our Global Business of Sports reporter here in New York. Randall, they had threatened to do this, to boycott the World Cup, and this is if FIFA moves ahead with spinning off this commercial and media rights arm, the way that the PGA Tour has done with its businesses. Just walk us through how significant this is.
It's huge. So you think about the members of UEFA. It is the world champion, Spain. It is one of the final four, three of the final four, now that I think about it. It is England, it is France, it is Croatia, it is Portugal, where Cristiano Ronaldo plays. And so a lot of the superpowers in the global business of football and the global sport of football are saying, you do this and we're out. That strips the World Cup of a lot of its popularity. And I do think that in the matches that I went to, they have a different culture than what we see in South America that is more tribal in nature. And so I think it's huge. It is a very, very big deal that UEFA is saying no, absolutely not. Now, the next question is, what is CONCACAF going to do? And CONCACAF is over North America, Central America, and the Caribbean. But this is a huge deal.
So how radical is it for FIFA to propose selling a stake in itself?
It's huge. I mean, look, with the PGA Tour and Live Golf comparison, the PGA Tour had to right some things, and Live Golf was exploiting some of maybe the flaws previously in the PGA Tour. Now the PGA Tour is righting its wrong. A lot of the players are happy. There haven't been that many complaints on FIFA's side in terms of how this tournament went. There are European nations who weren't happy with it expanding to 48, but now they're talking about going to 64. What does that mean for those superpowered countries? Is that they play more smaller teams, and the group stages get larger, which, you know, of course, will grow the money. But is growing the money that way, the way that it's supposed to happen? I'm not so sure. And that's what UEFA is looking at this and saying, if we're going to grow the business of soccer and the business of football, then we need to do it the right way. And this is not the right way.
So the feud is escalating. FIFA must have anticipated this. I mean, I can't imagine that they didn't think UEFA was going to blow up in fury over this. What are you looking for in terms of response from FIFA, how they navigate this?
Well, I would say UEFA and FIFA's relationship has long been strained. They have always been going back and forth, and this was the last straw for UEFA. And so at this point, what I'm watching next is to see what Gianni Infantino does. Like, of course, JP Morgan, who is running this deal with Thrive Capital and Kushner, of course, they are the recipients of this. They're the ones who are giving money. And so this is on FIFA and Gianni to try to get this thing across the finish line. But if your superpowers, if England, France, Spain, Portugal, Croatia, and so many of them don't participate in the World Cup, is anybody going to watch? Is that money that you're spending that you could potentially be spending? If they say we don't want it, okay, like now what? Is you're going to do a World Cup with a lot smaller nations? I just don't think that would be successful.
Wow, interesting. All right, this is what I would call a developing story.
Yeah, a major developing story, especially considering, like you said, 3 out of the 4 countries that made it to the finals were part of UEFA. So
the thought is that this money would be spent to develop programs, but is this the right way to do it? How many conversations did JP Morgan and FIFA have with other suitors? Did they go to private equity? Did they have, billionaires who were interested in this? Right. I'm not so sure. It looks like Bloomberg reported a couple days ago, or maybe this morning, that this was already agreed to, or we were talking about it long before the World Cup begins, and that's a problem because for UEFA. So.
All right, Randall, thank you so much. Appreciate it. Short notice. Randall Williams coming in. He covers the business of sport here, and this is all about the business of sport. Right now, let's get a little bit of a radio check here. We can do that with John Tucker and a Bloomberg Business Flash.
All right, just power through this real quick. A day after entering a technical correction, the NASDAQ 100 adding about 2.8%. Investors saw what looked like some bargains, so they jumped in. Semiconductor stocks in particular benefiting. The semiconductor index, the SOX, up close to 8%. Microsoft surging 14% on the strong cloud growth. Some relief they're not going to break the bank. Also with AI investments, S&P 500 up 61 points. The Dow up 141 points. The NASDAQ 100 up 718 points. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Scarlett.
All right. Thank you so much, John Tucker. When we talk about the AI trade, there's been a less excitement about it of late. Lots of questions, lots of questioning over whether all this investment is going to be worth it in the end. Today, it's kind of paying off. Meta's decline notwithstanding. You have the NASDAQ up more than 2%. But everyone's looking for a way to hedge perhaps the AI narrative or, alternatives. Eric Balchunas is our senior ETF analyst here at Bloomberg Intelligence, and he and his team have come up with an antidote to the AI trade. And Eric, you have a report that you published where you say the AI antidote can be found in the trash. Literally. You're talking about buying garbage collectors, companies that deal in waste management. Walk us through what you found.
Yeah, on the team, every time there's a really bad day with the glamour stocks like the Qs and DRAM and AI, we'll joke about how, hey, waste management is up. And so I looked into the numbers. We were just, found it amusing for a couple months. And I looked into the numbers, and this is shocking. Waste management has a negative 66 correlation to DRAM, which is, again, the heart of the memory chip trade over the past 4 months. That is more inversely correlated than treasuries, any other stock, first of all, and also gold and even the VIX. So like today, where DRAM did have a great day, it's up 13%. Waste management's down 4%. So it works from the negative too. But I will say that it's kind of poetic maybe that the opposite of these AI dreams is that you still have to pick up the garbage.
Do we have any reason? Is there a fundamental reason why this is there?
No, I just think that when there's a bad AI day, there's algos that rotate, and they generally go by value stocks, industrials, and staples. Staples has a pretty good inverse correlation as well, not quite what the garbage stocks are. But what's interesting, if you look at the industrial sector of which these garbage stocks are in, that's about a flat correlation, which is pretty good. I mean, it's a diversifier, but it's nowhere near negative 66. And then we look at the halo stocks, which is a trade of other sort of, goods and services that you kind of have to have. And the garbage collectors are in that ETF too. But again, the halo ETF is about flat. So these particular garbage companies just have, I think, a special ability to be the actual polar opposite of SK Hynix, basically.
Okay, when you talk about DRAM, the ETF that basically has packaged all the memory chip makers, you're really talking about 3 companies specifically, SK Hynix, Samsung Electronics, and Micron, because they're the big players. Is there an equivalent ETF for the garbage collectors?
No, there used to be one. It was way ahead of its time from Global X called the Waste Management ETF. WSTE was the ticker. Came out in 2011, closed in 2012. So it was talk about being way ahead of your time. But we have this thing called the Lazarus List, where issuers will dig up an old liquidated idea and try it again. We'll work with airlines. Jets was the 3rd attempt to airlines. Maybe someone will try this one. I will say, for anybody out there, this is a 4-month correlation study, and it's based on DRAM, not the general market. However, garbage collectors are still a good diversifier from the general market, but they're not like as inversely correlated. They just have a special inverse correlation to this memory chip trade. And I wanted to point that out because bonds have just not done that well. Like in the past couple months, and the past couple times we've checked, bonds kind of go down with stocks. So people are definitely searching for something.
All right, good stuff. Eric, fantastic reporting and digging around by your team. Eric Balchunas, our senior ETF analyst, with the report that the best AI mania hedge, perhaps, Paul, may just end up being to buy garbage collectors.
There you go. I couldn't have figured that out for the life of me. All right, let's switch gears, get back to the market here. Again, the S&P is up 60 points. The NASDAQ up 490 points, 2%. And the NASDAQ 100 is up 2.6%. So a little bit of a rebound for the tech names. More on the earnings fronts. Robinhood, the digital wealth management firm, reported some numbers that beat estimates. Stock trading down a little bit today. Not to worry. We have the Chief Financial Officer of Robinhood in our studios, Shiv Verma, CFO of Robinhood. Shiv, talk to us about your quarter that you guys reported. What was the message to the street these days about Robinhood?
Yeah, thanks for having me. So first, record quarter. It was our best quarter ever in terms of net deposits. Customers trust us with $22 billion of their hard-earned assets. Really incredible to see. Second, it flowed the financial profile. Record revenue, $1.3 billion, up 32% year over year. So not just on the asset side, but also the revenue. And third, we are launching a ton of new products. We just hit 13 businesses with 100 million of ARR. We added 2 new ones this year, our web product called Robinhood Legend and the credit card. So across the board, really great engagement from customers and translating to financial profile.
One of your existing businesses, crypto, is not doing as well, and it's partly because of the price action that we've seen in Bitcoin and the other digital coins overall. The crypto revenues beat, but they were down about 38% year over year, and weaker volumes may be an issue going forward. What turns that around?
Yeah, so it's a great question. First, we are long-term bullish on crypto. We believe in the asset class. We believe it's here to stay. What are we focusing on? The infrastructure layer. And so a couple things that we announced this quarter, the Robinhood chain, fastest chain ever to hit 100 million transactions. We also launched the Robinhood Earn product. You can lend your crypto out in stablecoin and get 7%. So the asset class and the coins, it's great for customers. You want to provide access. It'll ebb and flow. I've been there 8 years. I've seen probably 4 different crypto winters, but if you invest in the technology and you invest in the infrastructure, we believe that's here to stay. And the Robinhood chain was a great example of that.
Shiv, what's a typical, or who is a typical Robinhood investor? Maybe how has that changed?
Yeah, great question. So who is our median customer today?
Okay.
They tend to be 35 years old. They tend to be married, tend to be educated, extra discretionary income relative to the US, widely distributed across the US, not just a coastal product, 1 to 2 kids or a cat or a dog. That is our prototypical customer. What they're doing is as they're getting wealthier, they're using Robinhood for more and more of their products. So we announced Robinhood Banking last year, just at 3 billion deposits, growing really, really nicely. Our customers also say to us, hey, I bank with Robinhood. Even before we were a bank, that's how they thought about it. And so as they're getting wealthier, they want the same products everyone wants. Retirement assets, those are now up above 35 billion. They want ETFs. We just launched custodial accounts. I have a young daughter. She has an account on Robinhood. Trump accounts. We're now supporting all of the children. And so when I joined 8 years ago, the average age was around 27 or 28. We are growing with our customers. They're getting more wealthy. They're asking for more products. And so we always start with what do our customers want, and then we build it for them. And as you do that, you start to see them consolidate more of their wealth.
Okay, so that median customer you were just describing, what is their interest level towards prediction markets? And you know, when I ask about this, I'm curious beyond sports, the World Cup. You know, what is their interest in trading futures contracts or these event contracts on, I don't know, GDP, the Fed, inflation, something other than sports?
Yeah, so we just announced yesterday that we now have 2 million customers have used event contracts. Smaller relative to our $28 million customer base, but that was 1.5 million customers just a few weeks ago, so growing really nicely. We are seeing customers use it for a wide variety of things. So you mentioned economics. Yesterday was Fed Day. You tend to see a lot of contracts around interest rates. When there's a cultural moment, so whether it was the World Cup, Taylor Swift's wedding, things of those natures, you tend to do it there. Elections are really popular, so we're starting to see a lot, not just for the midterms, but also the primaries. We think we are at the beginning of a prediction market super cycle, that this could actually be bigger than the equities market. The fun part is use cases are coming up out of the woodwork. So an example I've shared before is last winter, we saw a lot of customers trading weather contracts. We were trying to figure out what they were doing. They were hedging their flights. They were waiting for delays, and they thought there'd be another way. We also saw that in a certain state, they were using it during hurricane season. They were supplementing their home insurance. Now, customers weren't explicitly saying, I'm buying insurance, but that they were starting to use. So there are so many different use cases. there's no doubt sports has found product market fit. But if you look overseas, actually the majority of contracts are non-sports. And it tends to be cultural moments, lifestyle, things of that nature. What we're really excited is for how do we make our brokerage product better? Say, for example, you have a view on Apple. You can buy the equity, you can buy a derivative, or in time, you should be able to buy an event contract. Well, Apple beat earnings. How many iPhones were they shipped? That's where we think it's going. And so again, sports is a great use case, but there are a lot of other areas that we're starting to see.
How is AI, agentic trading, how is that impacting your business?
So we're at the forefront of it. We believe in AI. And so our agentic products, we just announced it about 100,000 customers. It's really early. This first wave was for customers who are AI native. So you have to plug into your MCP and you have to do your own LLM, such as Codex or Claude Code. Even with that, we still had 100,000 customers who sign up. Where we're going is we're going to make it more native in the app. What does an agent actually do? All it does, it abstracts away a pain point. Let's say you're a customer and you have a view. I want to buy energy stocks. Okay, can you help me do research on that? Great, here's a list of things you could do. Now, can you help me actually execute the trade? That's the next step. And so we're not building agents just for the sake of agents. It's how do you solve customer pain points? So we started with the really techno-native. Now we're going to make it native in the app. And then going forward, we have some really fun things that we're cooking. I don't want to front run the product side, but we think across all of our products, not just brokerage, payments, banking, credit card, et cetera. There's a lot of things you could do.
I'm glad that you mentioned the Trump accounts, and I just want to circle back to that momentarily because you said that this is something you're focused on, bring in customer retention, of course. Analysts see this as a driver of future growth. What's the timeline for a meaningful contribution from the Trump accounts rollout?
Yeah, so it just started in early July, and the uptick has been phenomenal. So some numbers we shared yesterday, over 7 million children have already signed up, and about $1.5 billion of contributions have already been made. So in the first 3 to 4 weeks of being live, that is phenomenal. We are getting inbounds on so many different use cases. So employers, for example, Robinhood said we will match any of our employees. Many other employers have come out and said that, so we're building that. Donors, Michael Dell and Susan Dell have said they're going to make a big donation, so we're building that. We think this will be one of the most powerful ways to help children grow their wealth. The U.S. stock market, as you guys well know, is the greatest creator of human wealth in history. Getting customers to start early is so impactful.
Shiv, thank you so much. A pleasure to see you in our studio. Shiv Verma is the Chief Financial Officer of Robinhood. On the company's latest results, you look at the stock right now, Paul, down about 3.25% at $86.94 a share.
Yep, 25 buys, 6 holds, 1 sell. So the street likes the story, at least at this point. Pretty good story.
All right, much more coming up. This is Bloomberg Intelligence on Bloomberg Radio.
Speed, analysis, context. This is Boston's best source for news on the FM dial. Bloomberg 92.9. Coming up, the latest market-moving headlines from Bloomberg. First, an update from our partners at ABC News.
ABC News, I'm Sherry Preston. The U.S. economy expanded at a sluggish 1.5% pace from April through June. Consumer spending up as prices rose. The Fed's preferred rate of inflation, personal consumption expenditure, showing it grew at 3.7%, at pace since June from a year ago. One of the things we're all paying more for these days, energy. Here's ABC's Elizabeth Schulze.
A new estimate this morning from Moody's Analytics shows that the typical American household has now spent an extra $672 in gas, diesel, home heating, and jet fuel expenses combined since the start of the Iran war. Gas Buddy is also predicting that drivers will see the highest prices for the month of August on record.
The U.S. and Iran exchanging barrages of missiles once again overnight. Members of the European Football Association agreeing to jointly boycott FIFA competitions in the future in protest of a new private equity plan for the World Cup would be run by Jared Kushner's brother. This is ABC News.
Hi, I'm David Gura, inviting you to join us for Bloomberg This Weekend. Catch the show Saturdays and Sundays starting at 7 a.m. Make Bloomberg #1 on your weekend to-do list. Watch and listen on Bloomberg Radio, TV, and the Bloomberg Business app.
Data storage used to be straightforward, but AI has rewritten the rules. The data it needs to thrive is trapped in aging infrastructure. In fact, less than half of enterprises report that their data is AI ready. That makes initiatives stall before they start. Instead of fragmented systems, companies need a unified data platform, one intelligent layer that delivers data at the speed of AI, because good enough isn't good enough in the AI era. Learn more at everpuredata.com.
Man, I love this place. I've been surfing here since I was a kid. Now, seeing my grandson out on the water, it means everything to me. Watching him and taking in the blue waves, the sea breeze, Blurry horizon?
If you have geographic atrophy, or GA, subtle changes in vision could mean it's progressing toward irreversible vision loss. Izervay is proven to slow GA progression and could help preserve your vision for longer, so you may keep seeing the world around you. Izervay, or avacincaptad pegol, is an eye injection. Don't take it if you have an infection or active swelling in or around your eye. Izervay can cause eye infection, retinal detachment, or increased risk of wet AMD. Izervay may cause blood in the white of the eye, blurred vision, or a temporary increase in eye pressure. Do not drive or use machinery until vision has recovered after an eye injection or exam. Ask your retina specialist how you can slow your GA with Izervay. To learn more, call 1-855-IZERVAY or go to izervay.com. Paid for by Astellas Pharma.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Surveillance Podcast from Point 72, Sophia Drosis.
Well, that nominal GDP print probably speaks to ongoing health in corporate profits. As you know, corporate profits are coming off of...
It's got an AI overlay.
It does. But, I would say that the issue with the AI... The CapEx boom continues, and the chair mentioned that yesterday. It's quite strong.
Right.
But a large component of that is imported. So the potential for it to create overheating domestic conditions seems a bit less to me compared with other CapEx cycles.
Did we, as an outlier yesterday, have the dollar finally break? Is this a moment where this shocking dollar resilience, even with higher rates, finally turns around and we get, with a lack of credibility, dollar weakness?
So I think the dollar is going to lose a little bit of interest rate support and has. Of course, the market has repriced, seeing that the Fed didn't act on the accumulated high level of inflation at the last two meetings. So the market's extrapolating that a bit forward in terms of the reaction function. But we also need to be cognizant of what other central banks are doing. So the ECB last week declined to hike and also stated a bit more of an open-ended path. So perhaps they will not fully meet the amount of tightening that's priced in. And other central banks might be sounding a bit circumspect. And we had the Bank of England this morning. They held rates. So the question to me is, the Fed may have come across a bit more dovish than some people expected. But I think that this is a broader trend among central banks now.
Hear the full conversation on the latest edition of the Bloomberg Surveillance Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. A lot of green on the screen today. Computer chip companies clawing back some of the big recent losses and helping push the major stock averages up. Microsoft helping lead the way, leaping right now 14.9% for Microsoft. They were reporting a strong profit for the latest quarter than analysts expected. Growth was also pretty strong in the Azure cloud business. And Meta Platforms sliding 8%. The Facebook parent delivering a revenue outlook seen as pretty disappointing. The company also raising the low end of its full year forecast for CapEx, hello AI, and total expenses. Right now, the S&P 500 68 points higher, up 1%. The Dow up 225 points. The Nasdaq 100 up 748 points. That is a rise of 2.8%. The Fed press conference yesterday still reverberating, especially in the bond market. Andrew Hollenhorst at Citigroup, among economists who think Fed Chair Kevin Warsh really did send the wrong message.
I think there were reasons for Warsh to be less hawkish here. Still, I am surprised at how dovish it was.
Right now, the 30-year up a basis point, 521 on the long bond. Diamond Empire being sold at a fraction of its former value. Anglo-American in talks to offload De Beers for about $1 billion. Pretty steep drop. Since 2001, the diamond giant back then was worth more than $18 billion. Diamond industry has gone through all sorts of changes.
I think it's those lab-grown diamonds, man.
The synthetic gems and also the collapse in Chinese spending.
They're not spending as much on diamonds, so that takes away one big source of demand at a time when people, especially younger people, are perfectly happy to go with those lab-grown diamonds. Yeah. Although I did hear that smaller stones, natural stones, are in now because everyone just assumes that among the younger cohort, if you have a big rock on your finger, it's a lab-grown diamond. So they want to then get the natural diamonds for smaller stones around.
Remember Superman would take a lump of coal and press it in his hand and turn it into a diamond?
How do you feel about getting real versus a synthetic?
I don't care.
You wouldn't care, like if you're...
Oh,
okay.
Yeah, I don't think
she
I care.
says that.
All right.
You don't believe me?
I don't believe you for a hot second. No way. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right, John, thanks so much. Qualcomm reported some numbers here. Right now, Cristiano Amon, he's the CEO of Qualcomm. He is speaking with Bloomberg Technologies anchor Ed Ludlow. Let's take a listen.
Look, let's step back a little bit. What's happening with the handset market, and there's a handset market and there's a unique Qualcomm thing. Happening in the handset market is there are unprecedented memory prices and shortage. I think the price increases are very dramatic, as everybody know. I think you're seeing not only Qualcomm talking, you see some other companies talking about it, you see Apple talking about it. Therefore, I think what happened in the market is down. We actually project, and just when we think about from 26 to 27, the market's going to be down by about 20%. This is not because of demand for phones. This is because of there is not enough memory. The prices are so high, so the units are much lower. Consumers are kind of react to the lower price. The middle and the low part of the market, it's significantly contracted. The premium tier has some resilience, but even in the premium tier, what we see is a mix change. Consumers are preferring with the new prices that are higher to buy last year phone. They buy the entry premium, and I think that's actually causing this change in the market. There's a unique thing about Qualcomm, which is well understood, which is Apple's coming off the model, and is actually coming out faster because of the supply situation. So that is the situation in the short term. That is what's causing this issue. And it came out in the earnings reflected in two things. I think a weakness on handsets. We actually did the following disclosure. We talk about it. There's about $1.50 in earnings power that it's now will come back to Qualcomm when handsets normalize. And it is the overall market is down. It's not a demand issue. It's memory prices and supply. So that's the handset story. And that it reflected in earnings in two pieces, right? You saw, I think, the weakness on the guide, which is a market weakness, a mixed change. And then there's gross margin. The gross margin is very simple. We're slightly below the operating model of the company because input costs are up. In a shortage, and we've seen this during the pandemic, the entire semiconductor industry right now is at full capacity. So costs go up. We're adjusting pricing, but you have contracts, you have new design cycles, so there's a mismatch in quarters between the price adjustment and the cost. That creates this temporary, I think, issue on the slightly decline on the gross margin, and we're going to go back as prices flow through the model in the handsets. We're going to go back to the operating model. The exciting thing about the company is the new business and how we're actually transforming the company,
well,
as you pointed out.
Let's talk about it. In the past, we've called it diversifying. I called it transition, but I read the earnings presentation slides. So you're saying in full year 27, non-handset is just under 50%, and by full year 29, that handset business, which is the majority today, is only 1/3 of data center, automotive, and IoT. What pushes that most?
Yes. So this is a great question. So if you actually look what is happening with the company, everybody knows about this Apple transition on a handset, and then all of the growth that we've been doing with everything we did to transform the company. A couple of things that are actually driving this change. We actually talk about from this year, fiscal 26 to next year, growth is going to be 60% on no handset, and the driver is automotive. We actually in the earnings call said we're exit rate now. We're about $1 billion billion higher for 27 than we actually thought. It's continued to accelerate because of our position. Automotive is getting stronger. We have now more assisted driving and autonomy silicon and evolving over stack. The second thing is this beginning of the data center ramp. We still restated $5 billion in data center revenue in fiscal 27, and the IoT is starting to grow. On industrial, there's a lot of this conversation about open weight models, about AI on the edge. On industrial, in this fiscal year alone, we have about 3.5 billion of design win pipelines. So all of those things are going to go to, the projection that we made of $40 billion of non-handsets by fiscal 29, and you're going to see a 60% year-over-year increase on all of those new business, durable revenue, durable earnings, doesn't have the cyclical things on handsets, and I think that's really the future story of Qualcomm.
This is Bloomberg Tech, live on Bloomberg Television and Bloomberg Radio, and we're speaking to Qualcomm President and CEO Cristiano Amon. It wasn't that long ago we were talking at Investor Day where you laid out a $15 billion plus a data center opportunity through to 29. How's that going? I know it's been just a few weeks or months, but what progress have you made?
Yes, it's going very well. The most important milestone for us right now, I think, look, we outlined that we build a roadmap that there's products coming over a couple of years, right? We've been very clear how the roadmap is evolving. So the first set of revenues, which actually is the majority of the $5 billion that is happening right next year, it's a custom ASIC with two hyperscalers. Everybody asks us about who they are. The only thing I can say at this point is one in the United States, one in China. But the most important thing is when you think about the composition, the $15 billion, it has custom ASIC, but it has our accelerator, has our new high bandwidth compute, which is a new memory architecture, and it has our CPU. So the exciting thing is we're going to have in a couple quarters, we have, progressing with the development. In a couple quarters, we'll have silicon on the HPC that we're going to make people will be able to evaluate, I think, the performance claims. And I expect that is actually going to create even more interest than what we have today within the 15 billion.
Cristiano, the way that I look at Qualcomm as well, like on the smartphone side, Android in China, and then when I'm thinking about the data center, I'm trying to understand where the biggest opportunity is. So geographically, China or US, and then there's ASICs or your own products. Try and put them in order for me of priority.
Yes. When we provided the 15 billion number for fiscal 29, it's kind of well balanced across custom ASIC with hyperscalers. It's especially for new entrants, you should expect a lot of bespoke development. It's very well balanced on the CPU, which will start ramping in 2028, and the accelerator in HPC. But also, when we talk about HPC and the accelerator, HPC is actually part of some of custom ASICs deployments as well. As far as China, you should expect that our exposure to China, the data center, will be very similar as a percentage of data center revenue to all of the other semiconductor providers there are in the data center business today. China it's a big market. It's just a function of GDP, and when you look at some of the data centers, especially the providers of custom ASIC, they have exposure to China. Ours is going to be about the same percentage.
Understood.
All right, that was Cristiano Amon, Qualcomm CEO, speaking with Bloomberg Tech's anchor Ed Ludlow about Qualcomm reported some earnings, talking about the future growth of that company. Let's switch gears from chips to coffee. We can do that. Starbucks chairman and CEO Brian Niccol says that customers are spending more per visit. That comes with improved staffing and store upgrades, which are boosting transactions. Niccol spoke earlier with Bloomberg's Romain Bostic, and he said that the company's turnaround efforts are driving broad-based sales gains across customer demographics. Let's listen.
We were really smart about what we spent on these uplifts and the implications on the store. So, we can do these things for roughly $150,000. We do not close the store at all, so operations continue to perform. And then the experience that our partners have, because now they've got a new, really great looking coffee house, and that what our customers have results in, frankly, more transactions. So it's been a great program. We'll continue to push the program forward. We're going to accelerate it into 2027 because we know when we create a great coffee house and we have that great partner / barista to customer experience, we're rewarded with more business. And, it's not a big investment, but it's a meaningful investment, and then it gets us great results.
Is there any way you can share with me what the difference in comp sales is for a revamped store relative to the stores that haven't been uplifted?
We haven't shared that publicly, but what I can tell you is we see a move in a positive direction as it relates to transactions. And because of what we're seeing, we are accelerating the program.
I think the last time we talked with regards to transactions, you talked a lot about improving the in-store experience by also improving the speed of which those orders get out the door, whether it's in the cafe or in the drive-through. I know there was some color on the conference call about some of the time that you shaved off of that. We're talking seconds here, but it seems like those seconds matter to you. How much progress have you made?
Yeah, look, this is one where I'm really excited because we set out right from the go that we wanted to improve the speed that our customers experience and then do it consistently. And kind of behind that is really this drive towards more throughput. And we've seen just that. So we've got better throughput in the mornings. We also have better throughput in the afternoons. And frankly, as a result, all day long, our transactions are up throughout the day. And when you kind of pull that back, yes, customers are loving the experience, but our partners are doing a great job of being staffed as a team, deployed correctly, and then consistently executing the Green Apron service model, which then results in better speed at the drive-thru, better speed in the cafe, more on time in mobile order pickup, and frankly, pretty good speed in the delivery channel as well. So it is having the effect that we would want, where in totality, the Starbucks business now, I think, is providing people the great experience that they want at the speed that people need based on the occasion where they're visiting us.
All right, that was Starbucks CEO Brian Nicholson speaking with Bloomberg anchor Brian with Romaine Bostick there, talking about Starbucks. The company reported good earnings. Stock's up 3% today, up 27% year to date. So the folks at Starbucks are getting it done here. My Starbucks, Route 35 in Wall Township, New Jersey, is outstanding. Staff is great. They're always fully staffed. It's clean. It's all cool. I think they did get that renovation, new furniture and stuff like that. So I don't know. They're doing a good job in Jersey. Red Brown joins us here, consumer reporter for Bloomberg News. He covers all these consumer companies. Talk to us about Starbucks. Red, what did you see? What did you hear with their earnings?
Yeah, I think Starbucks is a story of just sort of continuing on this turnaround plan. It seems to be really gaining some momentum now. We've seen a couple of quarters now of them outperforming on the top line, and profits are going to start growing. Is the idea, off the back of it. So there was a lot of skepticism, I think, around this turnaround plan. It's just, moving this behemoth that is Starbucks, but some of the changes that they're making, which is kind of really focusing in on kind of, making their product more valuable for customers, especially when they're feeling this pinch, does seem to be resonating. So yeah, it seems like it's kind of full steam ahead for Brian Niccol and Starbucks at the moment.
It's interesting because I'll see, when I come up to my Starbucks, the drive-through line is crazy long, and people they got to be waiting in that thing for 10, 15 minutes. I walk into the store, there's only a handful of people in there. It's crazy how the experience has changed since, the last 20, 25 years with this company.
Absolutely. And I think that's kind of part of what they are kind of navigating is the different ways that people consume coffee. Starbucks needs to be able to do it across all of the different platforms. And I think that's also where they've made a lot of investments. I think we just heard Brian Niccol talking about how, even at just shaving seconds off, they do probably millions and millions of transactions a day. It equates to a better experience for everybody. But look, they're investing kind of across the board, across all of their different channels, be it drive-through. So they're definitely trying to make some technology improvements there. You heard them talk about the staffing and stores, things like that. That also kind of improves the experience. Then also their digital. They're trying to kind of find ways that the digital experience is still quite seamless for people as well. So they're not waiting for those drinks because those people are obviously in a rush, just like the drive-through line.
Yeah, and I would say, again, just about my experience at my local Starbucks, 95% of the in-store orders are pickup.
Yeah.
Digital. I'm the lone dude who goes up to the cashier and actually orders it directly from the barista. And they're kind of like a little shocked when they look up and there's actually a person standing there. Yeah. An old dude, yes, but with gray hair. But that's just the way it is. And I think it's gotten so much better, I think, over time. I don't know.
Yeah, I mean, they have to be able to do it all, right? Like, it has changed a lot, obviously, and they've been probably like a big part of that change. You know, I think like Starbucks has done a lot in the past to like kind of train, you know, consumers, like this is how you consume coffee to some extent. But they're making the investments where it matters right now to make sure that no matter how you come in, if you are wanting to have a chat with the barista, you know, they've done this whole green apron program and training those people to even be more kind of welcoming and smiling, the cups on the names on the cups, things like that. Like, right, like it, you know, again, it's like all these sort of like marginal things. It's sort of whatever the opposite of a death by 1,000 cuts is, right. Success by 1,000 cuts. That's kind of this approach for something like this size. It kind of requires that sort of intention to be looking at every aspect of the business and making sure that it's just it's what the customers need.
Let's go from coffee to burritos. Chipotle, they also raised their guidance there. I'm a big fan of the Chipotle out on 3rd Avenue.
Me too.
What's going on at Chipotle?
Chipotle is kind of a similar story in a lot of ways, which is interesting because like obviously Brian Niccol had so much success there, but they're kind of instituting a lot of similar, they're kind of following the playbook of Starbucks to some extent. You know, they're trying to get their stores faster with a lot of these upgrades. It's more back of the house with Chipotle. They're making sure that their kitchens are kind of upgraded and able to make sure that if you come in and you want whatever the LTO is of the moment, it's there. But they're also doing things similar to Starbucks, which is expanding the menu and trying to get people coming in different parts of the day, but doing it in a way that is gonna, you know, still fit with how people are feeling their budgets kind of shrinking at the moment. So one of the things that Chipotle is having a lot of success with is these protein cups. It's just a cup of chicken or steak or what have you. Really? But it's helping them do two things. First of all, it's helping people just come in at different parts of the day. They say that, you know, during the call, they kind of made this point that it's not sacrificing your usual lunch. It's maybe now you're coming in at 2:00 when you kind of need a little extra boost. Similar things at Starbucks, trying to push some of these lighter drinks to try to expand the occasions. But also for Chipotle, they say it's actually driving people to like add more to their meals. So, you know, maybe I'll get the extra scoop of chicken as well. I'm trying to hit my protein goals. So some of those things, right? Like those things are important to people right now. And so Chipotle kind of following the sort of the Starbucks playbook here.
All right, there you go. Some good numbers out of Starbucks, good numbers out of Chipotle. Another example of the consumer hanging in there. Red Brown, thanks so much. Appreciate it. Red Brown's a consumer reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker. I didn't know I had a protein goal. I'll have to check on that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Market continues to hold on to the gains here. The S&P is up 80 points, 1.1%. The Dow's up 350 points, that's 0.7%. And the Nasdaq's up 550 points, 2.25%. 10-year Treasury yields coming in a couple of basis points, 4.65%. And WTI crude oil is a little bit lower, sitting right at $84 per barrel. This is Bloomberg. Good morning.
This is WBOS HD1 Brookline, Boston. WNBP Newburyport. Programming paid for by Bloomberg. Now, an update from our partners at ABC News.
From ABC News, I'm Wayne Cabot. Breaking news out of the Capitol. President Trump may be breaking with Todd Blanche as Attorney General, saying on Truth Social he's considering pulling the nomination of his one-time personal attorney. The Senate Judiciary Committee had been expected to vote today on this.
The scheduled committee vote was scrapped, with two of the panel's GOP members saying they're not ready to support Todd Blanche's bid. Tom Tillis and John Cornyn say they want to see it in writing, a pledge from the AG nominee that the administration's anti-weaponization fund is truly dead. Blanche has repeatedly said the fund is not moving forward, but the Republican holdouts have said that's not enough. They've also got concerns about Blanche's sweeping order barring audits targeting Trump or his family.
ABC's Stephen Portnoy, the president just now saying he may pull the nomination for now, but try again once Cornyn and Tillis are out of office in January. As fighting escalates with the U.S. and Iran, other Mideast nations are fending off attacks, sometimes unsuccessfully, says ABC's Matt Rivers in Amman.
Once again here in Jordan, we had incoming fire from Iran overnight. U.S. troops forced to take cover in their bases here for the second straight night as 5 Iranian missiles were ultimately intercepted. Egypt also being targeted by a drone attack, and that is a major escalation. The first time that that's happened since this war began. U.S. forces in Kuwait targeted once again overnight as well.
A suspected Russian cruise missile left a giant crater in eastern Poland, apparently meant for Ukraine. As world energy traders wonder if the worst is still to come, for the average person, the turmoil is measurable.
A new estimate this morning from Moody's Analytics shows that the typical American household has now spent an extra $672 in gas, diesel, home heating, and jet fuel expenses combined since the start of the Iran war. Gas Buddy is also predicting that drivers will see the highest prices for the month of August on record.
ABC's Elizabeth Schulze, the Dow now up to 328 points. You're listening to ABC News.
Now, your 3-day weather forecast on Bloomberg 92.9.
Storm system that brought the rain to the Boston area yesterday remained stationary over the New York and southwestern portions of Connecticut. That system is gradually going to head out to sea over the next 24 to 36 hours. That leaves us under a canopy of cloudiness through the rest of the day, along with the chance for scattered showers and maybe a thunderstorm this afternoon. It'll be near 70. Systems should move out into the Gulf of Maine tonight. Any showers will wind down. Lows overnight 60 to 65. High pressure builds in tomorrow. Will turn partly to mostly sunny. There could be an isolated shower tomorrow afternoon. Highs are 75 to 80. Tomorrow night, we're partly cloudy, 65. Weekend looks dry with partial sunshine in the forecast on Saturday, highs 80 to 85. Sunday, we're partly sunny, but clouds increase in the afternoon. Sunday's highs 80 to 85. I'm Rob Carolyn, and that's your Bloomberg Weekend Forecast. Now back to the latest headlines from ABC News.
Public outcry has some communities pulling the plug on license plate readers, but despite the criticism, more than 100,000 of these AI-powered cameras are tracking vehicles in all 50 states.
Law enforcers who use the technology agree with Mark Nelson of the Oklahoma City Fraternal Order of Police.
This changes the game on how we're able to accomplish public safety.
But not universally in Los Angeles.
Until we can get those data, privacy, security, and sharing concerns ironed out.
The LAPD's Dean Gialema says the license reading cameras are being shut off.
ABC's Jim Ryan. More about the allegations against the actor Jared Leto from ABC's Hannah Battah.
Explosive allegations against Jared Leto, who won an Oscar for his role in Dallas Buyers Club. He starred in a string of Hollywood movies, including Tron Ares and Masters of the Universe. But now he faces new allegations of sexual misconduct from multiple women who spoke to the BBC in the documentary Jared Leto, Hollywood's Dark Secret. ABC News has not independently verified these claims. 4 of the women say they were teenagers when they met Leto, who was in his 30s and 40s.
Leto denies the allegations and has not been charged with a crime. There'll be a new way soon to get your food delivered faster. DoorDash now has approval from the FAA to start its own drone delivery service. Build its own aircraft, too. Food from the sky. There is no timeline yet when the service will be operational. I'm Wayne Cabot, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Egypt is pulled into the war. Welcome to the Thursday edition as LNG vessels are struck by drones in a port in Egypt as the U.S. pounds dozens of more targets in Iran, a day after Saudi Arabia did the same. We tackle the widening war coming up with Bloomberg Jerusalem correspondent Dan Williams, who joins us here in our studio straight ahead. Sam Altman and Jensen Huang spending the week in D.C. to make the case for AI advancement and open weight models. We're going to talk about their mission with an expert. The Oracle of AI is with us today. Gregory Allen from Decision Tree Research. Todd Blanche's confirmation to be Attorney General suddenly on ice, thanks to just 2 senators crossed by President Trump. We'll have analysis from our political panel straight ahead. But first, Wall Street, where at least some stocks are bouncing back today. Charlie Pellet has a look for us live from World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. I'm looking at a stampede of dip buyers coming into this market. Got to begin with the stocks because
because we got semis rallying. It has been a familiar story. I've been telling you, one day stocks up big time, another day down big time. Right now, I am looking at a gain of 8.1% on the Philadelphia Stock Exchange. Semiconductor index ripping higher. Bears repeating up now by 8.1%. Bottom line here, NASDAQ 100 index up more than 3%, up 3.1%. NASDAQ Composite up 2.5%. S&P higher by 90. That is a gain of 1.2%. Dow Industrials up 342 on the Dow, gain there of 0.7%. So a rebound in giant chip makers lifting stocks, dip buyers coming into the market on speculation that the AI trade will have more room to run. After the close of trading today, we will be hearing from both Apple and Amazon. A day after the Fed, we've got the 2-year 4.21% with a 10-year 4.66% and the 30-year 5.20%. The VIX, by the way, holding just above 18. Gold now up 1.1%, 41.12 the ounce. West Texas Intermediate crude retreating down 0.4%, 84.11. Brent 89.75 right now, down by 1.1%. White House National Economic Council Director Kevin Hassett says the inflation data makes Fed Chair Kevin Warsh's job a little easier. And on Bloomberg this morning, Hassett told us he does have full confidence in Warsh.
Of course, and there's a natural transition time where a new leader comes in and tries to get the House in order. I think that, that there were three dissents, but, that happened to Jay Powell in the past as well. The dissents all came from regional Fed presidents, not from the actual governors. And so it sounds like he's got his house in Washington in order.
White House National Economic Council Director Kevin Hassett interviewed this morning on Bloomberg. Coming up after the close of trading, Apple down now by 2.2%. We also hear from Amazon. That stock up 5.5% ahead of earnings. CapEx, obviously going to be the big story today. Meta Platforms, after last night's report, plunging by 8.5%. Microsoft heading completely the other direction after earnings, surging now by 16.1%. Recapping, the stocks up 8.1%, S&P higher now by 1.2%. Lots going on again today, Joe Matthew, and that is a Bloomberg Business Flash.
All right, always a pleasure to meet Charlie Pellet, smack dab in the middle of earnings reporting season. It will be another doozy after the bell tonight. And what a difference a day makes. This is wild. It's just a complete reversal of everything that we were talking about at this time yesterday. The thesis doesn't last more than 12 to 24 hours around here right now. So if you're trading, I don't know how you're making. If you sold Micron yesterday, I really do feel for you. Up $122 right now, bouncing off the floor. And it's, I guess, thanks in part to this whole situational awareness story. We'll have to talk more about this. Leopold Aschenbrenner looming large as Citadel. Ken Griffin's Citadel buys a big chunk of the holdings from this hedge fund led by the former OpenAI researcher, all of 25 years old. Is this why we just went through all that for 2 months? SK Hynix and Micron among his top holdings. We'll be watching markets throughout the day, of course, here on Balance of Power. While we talk politics in Washington, Charlie's got Wall Street covered in New York, and I'm awfully glad you joined us here on the Thursday edition on Bloomberg Radio, on satellite radio channel 121, and streaming live now on YouTube. Search Bloomberg Business News Live to find our live stream and join us right here in the studio on what is day 96. 96 days left until the midterm elections. So everything we talk about here, whether it's geopolitics or domestic issues, is colored by election season. In just a couple of days, senators will join House members in their respective districts, and all they're going to be doing is running for re-election for the rest of the year. Big news from Iran overnight, or should I say from Egypt. This time yesterday, we're talking about Saudi Arabia getting involved. Saudi Arabian fighter jets flying side by side with Americans hitting targets in Iran. Overnight, Egypt, 2 LNG vessels in an Egyptian port were struck by drones. No one's taken responsibility yet, but the radius continues to widen here. And there's no off-ramp. There are certainly no peace talks scheduled. Benjamin Netanyahu, who was in Washington to meet with the president just a couple of days ago, talking about the menu of options that lie before leaders as we speak. Listen.
He's got basically 3 options. 1, to indeed succeed in making a deal. 2, to continue the blockade. 3, to take military action. Anything that will produce the end of Iran's nuclear program is what we want. That's our common goal. We actually analyzed all three possibilities, and I thought we did it in an open way between friends and allies, and it's his decision.
Netanyahu talking on ABC News about the meeting with the president this week, remembering reporters were not brought inside, so that's as close to a readout as we will probably get. We have been blessed this week to have Dan Williams with us in Washington. He was at the White House for the meeting with Netanyahu, and he's got one more day in the Capitol, so we wanted to pull him in. Our Jerusalem correspondent at Bloomberg News. Dan, it's great to see you. Welcome back to Balance of Power.
My pleasure.
What do you think when you see Saudi Arabia on Wednesday, Egypt on Thursday? What's going on?
This is a muscular intervention, a more muscular and more public intervention, effectively by a U.S. aligned power there that has been at the receiving end of these attacks, not just from Iran, but also from Iran-aligned Houthis in Yemen. What it's doing now is displaying a public military prowess that it was more restrained about talking about earlier. Effectively, we have a pronounced proxy war here emerging. The war between Iran and the United States hasn't really stopped. There was a bit of a lull ahead of this visit by Netanyahu as Trump pursued yet again talks through Oman on tamping this down, perhaps receiving or reaching a resolution on Hormuz. It's now restarted, but again, it's below the threshold that could be defined as full war. What does that mean? The Americans aren't striking deep inland. They're mainly striking around Hormuz at military facilities that could endanger shipping, and the Iranians are striking at Iranian-aligned powers like Saudi Arabia, potentially Egypt, although Iran has not taken credit for that LNG strike that you mentioned a few minutes ago. However, they're avoiding Israel, the Iranians, right now, and there's a good reason for that. The moment the Israelis are hit by Iran, should that happen, they've said they will attack with full force. Then we could say we're back fully into this war.
What do you make of Benjamin Netanyahu's demeanor in that interview? And the reporting that came from the meeting was that he was very light touch in his approach to the president, simply sharing advice, sharing information, not coming to Washington with demands. Sounds like a successful visit in that way.
It would be defined as such. I can tell you, having spoken to a very senior member of his retinue yesterday, that's certainly the way the Israelis are seeing it. They came here to close ranks anew with the U.S. president, with his administration, after a swirl of reports, sometimes open statements by the president in recent weeks, expressing not just his vexation, his exasperation with the course of the war, but also to a degree with Israeli conduct, especially when it came to the second front, which is in Lebanon. Now, Israel is not part of this resumed fighting with Iran. That appears to be by design. The Americans have not requested it, and the Israelis are happy to content themselves with fighting Iran-backed Hezbollah in Lebanon. I think Netanyahu's point was to show the world and his electorate, he's up for re-election in October, that things are okay yet again with the US president, and also to publicly voice, should we call it, a submissive posture with the alpha dog. Forgive me being colloquial, but I think that Trump would approve of a term like that.
I bet he would.
He calls the shots. Netanyahu, in his own words, is the junior partner. I think this aims to dispel theories that have gone around that Israel was the Trump whisperer pulling his chain, pushing him into this war. That's not the case. It's Netanyahu coming, sharing ideas, saying he did not offer a proposal or a formula of his own. He wanted to hear what the president wants to do and is fully supportive of that.
You referred to an Iranian proxy war. You've already mentioned Hezbollah. What is Hezbollah's posture right now following very intense fighting with Israel a couple of weeks ago? And how come no one is talking about Gaza, Hamas, which is effectively how this all began?
That's a very good observation, and we are expecting in the near future to hear news from Gaza. There are multiple proliferating press reports in the last 2-3 hours that Hamas has agreed to disarm under a US-sponsored plan by the so-called Board of Peace. It's an international consortium set up to take Gaza from ceasefire to peaceful reconstruction and recovery. That requires at the very least that Hamas put down its weapons, become reabsorbed into the Palestinian body politic as another political party, not a subnational group. The Israelis have said they're open to it, but according to every diplomat involved, it hinges on Hamas disarmament. Hamas has yet to confirm those reports. if indeed we hear in the near future that it's laying down its arms, that will entirely shift this crisis.
Amazing.
Obviously, there are many fronts, but Gaza is the ground zero of this multi-front war culminating in this current US-Israeli war with Iran. Presumably, once Hamas feels comfortable enough to take that step, Hezbollah may follow in Lebanon. Iran will be losing two of its proxies on the Mediterranean coast. It may actually become more defiant, feeling that its influence in the region has been cut down, or it may see itself also in a position to rethink its entire posture, at least when it comes to the United States and the Strait of Hormuz.
This would be dramatic, dramatic news if it were to happen. And not to digress, but what would this mean for Gaza? No one knows this better than you. Would there be immediate investment? How would this rebuilding take place?
It wouldn't be immediate, as Mladenov, he's the Bulgarian diplomat who now heads effectively the Board of Peace, has said no one's going to invest when they're worried that there is a bomb or an armed gunman around the corner.
So first, trust would need to be established.
Trust, verification, and also not just an end to the arsenal wielded by Hamas, but an end to the tunnels dug by Hamas. Hamas still controls 35% of the Gaza Strip. It has tens of thousands and low tens of thousands of fighters, many of them teenagers effectively conscripted because of their lack of other options now. They really are destitute in the Gaza Strip. So what there would be is a process beyond the giving up of the arsenal verification process. Engineers sent in to dismantle what remains of those tunnels, to ensure that there is no underground infrastructure for Hamas or another armed group to fall back on. Then we would see long-term reconstruction as well as an Israeli withdrawal.
You're prepared to report on that?
I'm very much looking forward to it.
One of the greatest developments of your career to cover this.
Absolutely. You have a part of the world that has suffered immensely for decades, certainly in the last 2.5 years. And literally from the ground up, I don't mean to be blithe about it, but the destruction is widespread. A sea of ruins in what used to be the Gaza Strip. Many people living in tents. It would be one of the biggest rehabilitation projects we've seen, certainly this century, potentially since the late 20th century, the mid-20th century.
Dan, we're so lucky to have you, and it's been a real treat to have you in Washington this week. I hope that you'll come back, and I'd love to come see you at your home someday as well.
I'm a big fan of your show.
Well, thank you for being part of it here. How about this? Dan Williams in Washington, D.C. Back to Jerusalem he goes, reporting for Bloomberg News. And many thanks to Dan for being with us here. We turn to the AI race next. Greg Allen's coming in, only on Bloomberg. Hear our full conversation with Dan Williams by going to Apple, Spotify, wherever you get your podcasts. Watch us live on YouTube and listen anytime at Bloomberg.com.
Big Tech reports earnings.
Microsoft, everything is in the cloud growth, better than expectations.
Azure revenue surpassing $100 billion.
And Bloomberg brings you the headlines first.
Meta Platforms did miss estimates.
There wasn't much of an upside when it comes to the top line.
For breaking earnings news and expert analysis.
The AI euphoria is being questioned across the board.
Listen on Apple CarPlay or Android Auto with the Bloomberg Business app. And always on Bloomberg 92.9.
With the Bloomberg Small Business Report, I'm John Tucker. For a growing number of young workers, quitting their regular jobs to become social media influencers is becoming more plausible. Call it the middle-class creator economy. The rise of TikTok, Instagram Reels, and Amazon storefronts is allowing them to piece together an income online through brand deals, affiliate links, and highly personal videos documenting everyday life. A small but loyal audience can now generate enough income to rival a mid-level salary. Brands are increasingly moving money toward these so-called micro-influencers, smaller online personalities who have less than 100,000 followers. They may not become stars, but success online can bring greater freedom and higher pay than traditional office jobs. This middle-class hustle does require constant effort to maintain and has no promise of lifetime longevity, with creators having no predictable paycheck or job protections. And that's the Bloomberg Small Business Report.
Hi, how can I help?
Well, my husband and I feel like we've outgrown our current money manager.
I see.
Our lives have changed, and we need something more than just mutual funds to help us in retirement.
She's right.
I hear that often. At Fisher Investments, we'd start by getting to know you, your finances, family, health, lifestyle. We tailor a portfolio around your goals and needs.
Sounds good.
Can you help with estate planning?
Yes. We have a team of specialists who can help you with estate planning, Social Security, investment income, and more.
We'll get to know your whole financial picture and help keep you on the path to a comfortable retirement.
And your fees?
We have a simple, transparent fee that's a percentage of the value of your portfolio. So we do better when you do better.
I feel better already.
At Fisher Investments, we're clearly different. Learn more at fisherinvestments.com/different. Investing in securities involves the risk of loss.
Now, your 3-day weather forecast on Bloomberg 92.9.
Low pressure drifting across New England, resulting in some showers this afternoon and maybe a thunderstorm. We're close to 70. Showers end tonight, 60 to 65. High pressure heads our way tomorrow. We'll see some clearing, though there may be an isolated shower tomorrow afternoon at 75 to 80. Saturday, partial sun, 80 to 85. Some sun on Sunday, but it will fade as clouds roll in. I'm Rob Carrollton with your weekend forecast on Bloomberg 92.9.
Why wade through boring and irrelevant topics on AM radio when you can listen to Bloomberg 92.9 FM for stories that matter? Breaking global news and the context you need. Bloomberg 92.9. Faster, smarter, better.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We're looking at the S&P 500 index. Best level of the day right now, up 98 points. That is a gain of 1.4%. Dow Industrials are surging 438, up 0.9. NASDAQ up 2.6%. The NASDAQ 100 index up by 3.1%. And the SOX, the Philadelphia Stock Exchange Semiconductor Index, now surging by 8.3%. A rebound in giant chip makers lifting stocks, dip buyers coming into the market again. That SOX number bears repeating, up now by 8.4%. The 2-year yield after yesterday's Fed decision, 4.21%, with a 10-year 4.65%, and the 30-year 5.20%. Gold up $48 the ounce, now at $41.15, up 1.2%. West Texas Intermediate crude down 0.8%, 83.80 a barrel. Brent 89.50, down 1.4% as oil traders continue to monitor developments in the Middle East. Oracle shares higher after saying it will expand a partnership with Google Cloud to bring Gemini AI tools to its business customers. And Qualcomm, the largest maker of smartphone processors, gave a weak profit forecast for the current quarter, signaling its component shortages and rising costs are taking a toll on its main market. Qualcomm now lower by 1.3%. First day out for Reformation Inc. That is a sustainable women's wear brand. It opened at its IPO price and its trading debut. Shares now higher by about 0.8%. And a sports note, UEFA's 55 member nations have resolved to boycott FIFA tournaments if President Infantino proceeds with plans to sell World Cup stakes to private investors. Recapping, S&P up 1.3%. The big story, though, the rebound in the stocks, up now by 8.1%. That, Joe Matthew, is a Bloomberg Business Flash.
Okay, Charlie, thank you so much, and thank you for being with us here on the Thursday edition of Balance of Power. Welcome to Little Friday. You made it almost to Friday. We're live on Bloomberg Radio and on YouTube. Search Bloomberg Business News Live, the preferred way to consume this program. You can also subscribe to the podcast, of course, curated daily by America's producer. And you can find that at Apple, Spotify, or, as we say, wherever you get your podcasts. We've got some drama at the Library of Congress. It's not often we talk about the things that happen in the opulent library. But a pigeon has taken up residence, we understand, inside the Library of Congress's reading room. This is a big deal going on up there right now, because if you've ever tried to get a pigeon out of a library, apparently there's a lot to this. It's been stuck for 4 days. And the architect of the Capitol's got a team they put together here to try to get the bird out. Right now, they're trying to get it out a window. If they have to corral the bird in some other manual way, this could be intense. We're going to be keeping tabs on this. As I read this morning in Politico, back in 2011, it took a full week to get a hawk out of the reading room's dome. The Raptor Conservancy of Virginia had to be called in. Let's hope it doesn't get to that level. Almost as dramatic as the push and pull over AI this week in Washington, when Jensen and Altman have to get on planes to come here, Did you hear Sam Altman had dinner at the Monocle last night with Mark Warner and Tim Kaine? Do you think that's what he wanted to be doing on Wednesday night? They've got a case to make. Jensen was even in the White House yesterday talking to President Trump, and this is all about, hey, what are we doing here, guys? Are we throttling advancements just as we hold the lead in this race against China? He was not on camera when the president was in the Oval yesterday talking about his reno of Dulles Airport. The people movers we talked about. Jensen Huang's smart enough to stay off camera, but the president, of course, outed him. Listen.
Well, we're looking at AI, we're looking at controls. We're also making sure that we lead. So we're leading China in AI by a lot. China has virtually no controls. It's freewheeling a little bit. So we have to be careful in both ways. We don't want to restrict them, where all of a sudden we come in second to China. Whoever wins with AI is going to win. That's how big it is. So it's bigger than the internet ever was. It's bigger than anything ever was. So I don't want to restrict. I know many of these people. I don't want to restrict them from doing great work.
I don't want to restrict, as he's looking at Jensen Huang. He said earlier, I guess it was a different cut. He said, Jensen's here. He didn't mean Ben Jensen from CSIS, although I guess he could have been there. So it brings me to this letter here. 1,200 employees of leading AI companies signing a petition that they have called Pacing the Frontier. I've got the PDF, otherwise I'd hold it up for you. Urging Washington to back an international framework capable, they say, of throttling AI development and advancement. Sam Altman talking to the White House about the need to pace themselves. So in the middle of all of this, and what Axios today was calling the prisoner's dilemma, we thought we would turn to the oracle of AI. When we need big ideas and we need to understand complex moments in this space, you know what we do on this program. We talk to Greg Allen. And he's with us now, I'm glad to say, in studio, the founder and CEO of Decision Tree Research. He used to direct strategy and policy at the Department of Defense Joint Artificial Intelligence Center. And it's always great, Mr. Allen, to see you. Welcome back to Bloomberg. What do we make of this pacing yourself? If that's the advice that is taken, does China take the lead?
Well, I think there's two big developments just in the past handful of weeks that are competing and pulling this administration in different directions. On the one hand, you have the recent news that an OpenAI model during cybersecurity testing escaped from its testing environment, hacked into a separate company, found exactly what it was looking for, and came back and told OpenAI, hey, I passed the test and I figured out what you were trying to get me to find. That really raised alarm bells about just how powerful these systems are today, how powerful they could be in the future. At the same time, you've got Chinese open source models that are not that far behind. These are really capable systems. And the White House has now accused Moonshot AI, the releaser of Kimi K3, probably the best open source Chinese model right now, of distilling that from the American systems. So on the one hand, you can look at these systems and say, yes, we need safeguards in place. Oh my gosh, if they can do that, we need a way of making sure that this goes well. On the other hand, if China doesn't have any such restrictions and they release it on a freewheeling basis, we incur all of the cost of regulations, but not necessarily very many of the benefits of regulations in terms of increased safety. And so this is the needle that the administration is trying to thread. They've got a deadline due in 48 hours here to come up with a new voluntary framework in which the government is going to review models before they're released. We don't know what's going to be in this, but it is probably going to be voluntary, which says companies, if you'd like the government to check your homework and make sure that this thing is secure from a cybersecurity basis, you can do that. But if you're concerned about competition and you want to just release, you can probably do that too.
So were these trips successful then? It's sounding like maybe not, at least for Sam Altman. And do Altman and Jensen agree?
So I think you can point to a few areas where these conversations that Altman, that Jensen Huang is having with key stakeholders are moving the needle. One quote that really caught my attention was Senator Mark Warner saying that perhaps the open source genie is out of the bottle, as in if there was ever a moment in which we had such a significant lead over China that we could use that that to solidify the safety regulations, solidify the procedures, that window may have closed. And so now we have to make decisions under the basis of Chinese near parity on these types of systems. Again, this all comes back to the fact that on the one hand, there's a lot of really high quality companies in China with bona fide AI geniuses. On the other hand, why are they doing so much better than the American open source community? And there, I think it's pretty simple. The American open source community is respecting the intellectual property of OpenAI, of Anthropic. The Chinese ones are not. And that's a permanent advantage if you can distill these models, squeeze all the intelligence out, and give it away for free.
So this is an argument against open weight models, and I mean, your opinion on this. Do you think they should be open now?
So I think there's two debates. One is, should we ban open weight models at all? And the second is, should we ban Chinese open weight models? And these are separate questions. The cadre of people who are saying we should restrict open weight models writ large, it's not a very large community who wants to ban these. It's really a niche, almost fringe policy community.
Got it.
Where there is some real debate is about how we should restrict open source models once they reach a certain capability threshold. So some people are saying, oh, we should regulate closed source. We shouldn't regulate open source or open weight models. But just think about what that might mean for 1 second. If a company says, hey, I've created an AI model that can generate child sex abuse material, but don't worry, it's open weight. Has that actually assuaged your concerns at all as a regulator? So the point is, if you're creating models that can do bad things, whether that's child sex abuse material, whether that's cyber offense type capabilities, you do need some restrictions probably to apply, whether it's open weight or whether it's closed source. The second debate is about these Chinese open source models. And there the real question is, look, if they're just stealing American IP that cost hundreds of billions of dollars to generate and then trying to give it away for free, well, yes, some people are going to be happy that they're getting that for free, but is that the kind of incentive structure that we want to reward? And do we have the tools available? I think Anthropic, OpenAI, the argument they would make is, look, China could just start looking at all the pharma companies too and reverse engineering those drugs and selling generic versions for pennies on the dollar. The way that we protect our pharma companies is by threats of sanctions, by threats of entity listings. That's exactly what Treasury Secretary Scott Bessent was said on the table to protect our AI intellectual property. So that's kind of the debate we're having right now.
All right. Talk to us lastly about the debate on Wall Street, because the markets are more confused than ever. Manic. In fact, there's been a massive AI unwind, and every time we hear CapEx and there's any number attached to it that's higher than what we expected, this market falls out of bed. There's a huge concern that the spending's about to fall off, that the crunch and shortage of memory chips is about to dissipate. Is there any reason to believe that? Is anyone actually pulling back?
So I understand these market movements are a big deal for folks like who watch this show, folks like yourself. But let's just keep these things in perspective here. When we talk about big market movements, a big market fall, we're usually talking about a 5 or a 10% drop, which don't get me wrong, that's a real movement. But Micron stock went up 700% last year. So we're talking about we've reached the summit of Mount Everest and now we've gone down a few paces. We're still up very, very high in terms of where these companies are and how important they are.
Is the skepticism justified, though, that we're feeling right now?
So I think it comes back to what we were talking about when you and I were talking about some of these IPO valuations. If you take a claim like that of Google DeepMind CEO Demis Hassabis, where he says that the AI revolution is going to be bigger than the Industrial Revolution, 10 times bigger than the Industrial Revolution, and 10 times faster, I would say that has to be true in order for these valuations to make sense. Not just 10 times bigger, but also 10 times faster. And I think AI is a legitimate revolution, but that's a lot to bet trillions of dollars on.
You heard it from the man who knows, Gregory Allen, Decision Tree Research. Thanks for crossing the river to talk to us, and stay in touch, of course. We're live in Washington on Balance of Power. I'm Joe Matthews. Stay with us right here on Bloomberg Radio.
Faster, smarter, better. This is Boston's best source for news on the FM dial. Bloomberg 92.9. Coming up, the latest market-moving headlines from Bloomberg. First, an update from our partners at ABC News.
ABC News, I'm Wayne Cabot. A Washington surprise. President Trump now saying he may pull the nomination of Todd Blanche for Attorney General until the two men blocking the vote in the Senate, John Cornyn and Tom Tillis, are out of office in January. Cornyn lost a primary bid for re-election and tells ABC's Jay O'Brien he remains a no vote because Blanche hasn't fully abandoned the compensation fund that President Trump wants.
Well, I like to think that, in matters of principle like this, my position would be the same, but obviously provides a measure of political freedom.
The war is widening. Iran firing missiles for a second straight day into Jordan and into Kuwait, where a strike killed a person. Iran's proxy suspected of drone attacks on ships off Egypt and into Saudi Arabia. Poland's prime minister says a Russian cruise missile left a giant crater in eastern Poland. The missile apparently was intended to hit a target in Ukraine. This is ABC News.
The news doesn't stop on the weekends, and now neither do we. This is Lisa Mateo. Join us on Bloomberg this weekend. Watch and listen to the new show Saturdays and Sundays starting at 7 a.m. on Bloomberg Radio, TV, and the Bloomberg Business app.
At Franklin Templeton, we've long believed in the importance of turning wisdom into a sharper edge. That's why we've combined the expertise of Benefit Street Partners, Clarion Partners, and Lexington Partners to offer you a variety of private market opportunities previously available only to institutional investors. Learn more at ftprivatemarkets.com. Again, that's ftprivatemarkets.com. All investments involve risk, including loss of principal.
The entertainment business is changing fast. At Bloomberg Screen Time, we'll bring together the executives, creators, investors, and entrepreneurs shaping what's next in Hollywood, music, sports, and gaming. We'll talk about the biggest stories in media, like the merger of Paramount and Warner Brothers, the booming live events business, and the potential impact of AI. I'm Lucas Shaw, and I'll be hosting Bloomberg Screen Time in Los Angeles September 30th and October 1st. Join us and request your invitation today at bloomberglive.com/screentime/radio.
Don't wait for headlines. Watch the news unfold in real time at Bloomberg's New Economy Forum, live from New Delhi, October 13th through the 15th, as global leaders come together to tackle the biggest issues shaping our future, from geopolitics and global trade to technology and the world's new balance of power. You'll have a front row seat to the conversations that matter most. Watch live at BloombergNewEconomy.com. That's BloombergNewEconomy.com.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Wall Street Week podcast, we talk with the woman who negotiated for Canada to come up with the current USMCA. Krista Freeland gives us her perspective from north of the border on the latest round of Trump tariffs, specifically directed at her home country. What's the best way to negotiate with President Trump over tariffs? Accommodate or retaliate?
Something that I never thought I would see in my lifetime is that we are now seeing that more Canadians see the United States as a threat than China. Canadians, for the first time in this polling, see China as a more reliable partner than the United States. Communist, authoritarian China, a country that just a few years ago illegally imprisoned 2 innocent Canadians, ironically to punish Canada for honoring our extradition treaty with the United States. Yet this country, Canadians feel, is more reliable and trustworthy than the United States.
You wrote a piece about this problem of accommodation versus retaliation in dealing with the Trump administration on trade. If indeed the Canadian government decided we have to go the retaliation route, what sorts of levers does it have?
I do think that the lesson that the Trump administration is teaching the world, that the only countries that ultimately get to a good place with this administration are countries that stand strong. I think the best approach to this administration is do not escalate. Don't look for a fight. If you can find an area to agree on, that's great. But do not back down.
Hear the full conversation on the latest edition of the Bloomberg Wall Street Week podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all pushing higher. The big story, though, dip buyers coming in to scoop up semis. The stocks, the Philadelphia's Semiconductor Stock Index up now by 7.6%. That's helping lift NASDAQ and the NASDAQ 100 Index. Right now we're looking at a 2.4% gain for NASDAQ. For the NASDAQ 100 Index, an advance of almost 3%. S&P keeping it all in context, up 1.2%. The Dow, meanwhile, higher by 427 points, up 0.8%, making up some of yesterday's sell-off. The 2-year, 4.21%. We've got the 10-year at 4.65%. The 30-year, 5.20%. Gold, meanwhile, at $4,110 the ounce, up 1.1%. A retreat for crude, down 0.7%, 83.87 a barrel. And Brent right now at 89.45, down 1.4%. Wall Street certainly has lots of questions today following yesterday's news conference with Fed Chair Kevin Warsh. Bond yields are at a 19-year high. Investors are betting that Warsh is only delaying an inevitable rate hike. Seema Shah is Chief Global Strategist at Principal Asset Management. And on surveillance this morning, she told us it's all about credibility and independence.
Go back 3 or 4 weeks. I think the market had finally started to discard this idea that the Chair Warsh was going to be the mouthpiece for President Trump. I think fast forward to today and those question marks are back. Does Chair Warsh want to keep rates unchanged because that's President Trump's perspective? I think there is a question, and I think it needs to be dealt with.
Seema Shah, Principal Asset Management, interviewed on surveillance. Starbucks higher after earnings. Starbucks shares up by 3.4%. Chipotle Mexican Grill shares are surging after the restaurant chain reported comparable sales for the second quarter that beat analyst estimates. Right now, Chipotle is up by 12.4%. Pierre Cava Restaurant, the Mediterranean chain, up now by 0.3%. And Yum Brands says its Taco Bell business is starting to recover from the Cyclospora parasite outbreak linked to tainted lettuce that crimped its sales. Yum right now up by 3.4%. Amazon, Apple report after the close of trading, and that, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We look forward to hearing from Apple and the rest after the bell, and we'll have a lot more on the late earnings when you join us for the late edition of Balance of Power. 5 p.m. Eastern. We do this twice a day around here on Bloomberg TV and radio. Ed Ludlow will join us to start unpacking results as soon as they are out. We'll be tracking the stocks in after-hours trading as well. Thanks for being with us here on the Thursday edition of Balance of Power. We're live in Washington. My thoughts today are with the great broadcaster, Mike Girardi, who we lost yesterday. The reason why I got into this business, Mike Girardi, we lost at the age of 86, a great inspiration to me as a young guy, and my thoughts are with his sisters and his children and the good people at the great WINY radio in Putnam, Connecticut, which for me as a kid was the dream factory. Wouldn't be able to do this today if it weren't for Mikey G, the Bumblebee. High drama on Capitol Hill. We talked to Senator John Kennedy of Louisiana on the late edition of Balance of Power. If you did not see or hear that interview, go to YouTube, go to the website, and spin it back. He described politics in Washington right now as happy hour at an airport Chili's, which is poetry. If you're in Washington or you've ever been to an airport Chili's, it's a food fight. And now we understand Todd Blanche, the president's pick to be Attorney General, who was actually the acting Attorney General, just lost his confirmation hearing because of the gentleman from Texas. Be careful who you cross, as the president learns. Senator John Cornyn, who sits on the Judiciary Committee, that which would clear the Blanche confirmation, says, no, I'm not voting on anybody until I see in writing, I want it on paper, as he says, a promise that there will be no anti-weaponization fund at the White House. Very simple stuff. They could have given this to him yesterday. Tom Tillis, by the way, wants the same guarantee. This is your YOLO caucus at work, right? The president primaried John Cornyn. His political career is over, and so he doesn't care anymore. And his colleague John Kennedy from Louisiana understands. He talked to us about this last night. Listen.
If I were Mr. Blanche, I would give Cornyn what he wants. If he doesn't, he's not going to be confirmed. I'm not saying I agree with Senator Cornyn, but I know Senator Cornyn, and he's not backing down.
He's not backing down, and so here we are. Now, this is the interesting part. If you read the reports, the DOJ actually gave John Cornyn something in writing, but it wasn't good enough. A DOJ official granted anonymity to describe the negotiations, said the department sent new language to both senators and remains in discussion with them. So they offered some sort of half measure indicating that the weaponization fund is still alive? Love to know what was in this. And if they are talking, could this be saved in the next day or two? It'd be pretty easy to give John Cornyn what he wants. Let's ask our political panel. We're joined right now by Rosemary Becky, founder and president of Jersey First, our Republican strategist, and Doug Farrer, a Democratic strategist, principal at Maywood Strategies. Great to see both of you here. Doug, you've been around Washington a long time. What do you think the DOJ sent John Cornyn, and why is this so difficult to put in writing?
Well, I don't know what they sent, and I think it's clear that Blanche and the White House are unwilling to relent on this IRS provision that Cornyn wants to strip out. Cornyn, frankly, is doing the Republicans a favor by standing his ground on this. This is super politically unpopular, easy to spin by Democrats as corruption because that's what it is. And, you know, Blanche and the White House have really made a mess of this and really exposed that it's really the president's personal interests that he's putting before the country. Blanche even described himself as Trump's lawyer in his own hearing, which, you know, goes in the face of kind of the concept of the Department of Justice representing the American people. Look, we are in a dark place. Nixon sicked the IRS on his enemies, got impeached for it. Now it's a Watergate every day here in Washington.
Well, I don't know about every day, Rosemary, but we do have an attorney general who's waiting for confirmation. Wouldn't it behoove the administration to just close this formally once and for all?
So, yes, you would think, you know, and I don't think it's surprising at all the position that Senator Cornyn has taken. You know, clearly he wants the books closed on this. And frankly, Senator Kennedy is giving the White House some good advice here.
I should mention, by the way, you're just reminding me with that amazing backdrop, Rosemary, that Jersey Mike's is indicated to open at $22.25 to $22.75 here. Any moment, the IPO price $23, so I don't know. Rosemary, I know you've got a deli to go to, but Wall Street's going to Jersey Mike's today. What do you think about this, Doug? You know, President Trump could keep Todd Blanche in this position on an acting level as long as he wants, right?
Sort of. I mean, there's regulations and rules that determine a 200-plus day clock, and then there's also a particular carve-out for the attorney general to stay on or a deputy to take control. So, you know, look, they can play with the rules. I don't think a Republican House or Senate's going to call them on it. But, you know, it's not as easy to be an unconfirmed acting attorney general as it is to get that confirmation. Yeah. It protects you politically when you're confirmed, and it also matters in court and makes the strength of the lawsuits that you bring or the defending you do of government policies stronger in the eyes of judges when you're a confirmed attorney general. So there is some downside here if he's unable to confirm him.
Really interesting. Rosemary, this is an issue, I suppose, but it's also an example of the president finding a line on Capitol Hill. How difficult can not just these two, Cornyn and Tillis, but also Bill Cassidy, who was primaried by the president. How difficult could they make life for the Trump agenda for the rest of this Congress?
Oh, I think they can make it very, very difficult from here through the end of the year. You know, and that's what happens, right? In these instances where, you know, you've got folks that are being primaried and the president endorsing the other side. You know, these three members of Congress of the Senate have always been very, very strong members of the Senate. And frankly, there are some things that they're going to want to see get done, before the end of this session. And so I think, we've obviously seen it with Senator Tillis. He's been extraordinarily outspoken and successful in being outspoken. And so I think we're certainly going to see Senator Cornyn, as well as Senator Cassidy, be, pretty outspoken from now till the end of the session.
So, Doug, what can they get done before the Senate leaves here in August? Because the word for Blanche is that they can't, now that this has happened, it's not likely they're going to get this done before August recess. Can they get the CR passed? Can we know at least before everybody goes home for August that the government will be funded?
I don't know. I mean, when you ruin the political careers of your allies for vengeance, it turns out that they can stop you from getting your agenda across the line. I think that $95 billion the House passed, mostly for the Iran war, landed like a wet blanket in the Senate. Obviously, John Thune's been saying he can't pass SAVE Act. He can't get rid of the filibuster. He doesn't have the votes for this. He doesn't have the votes for that. The lame duck may come around and they'll extend it out a little bit, especially if Democrats perform really well in November. But I'm not betting on the Senate to do anything at all for the rest of the term until the lame duck.
I should have mentioned that President Trump actually did post about this right before we came to air on Truth Social. Todd Blanche is a star, he writes. Capital letters, star, and everyone knows it, exclamation point. He has the potential to go down as one of the greatest attorney generals of all time. However, John Cornyn of Texas and Tom Tillis of North Carolina, both of whom I refuse to endorse and whose political careers have been ended by my action, are refusing to vote for this great nominee, who will remain in any event as acting. So here's what he says. I have no objection to temporarily withdrawing Todd's name if they do not do the right thing, and putting him back after Cornyn and Tillis are out of office. What would that achieve, Rosemary? Because the rumor in the tip sheets this morning is that he'll put Bill Pulte in for acting AG just to poke everybody in the meantime.
Yeah, it could certainly mean that. I mean, look, we've got some high stakes negotiating going on right now with the Senate. And so I think it'll be interesting to watch this play out. I mean, not only do you have this nomination, but as you were just discussing, you've got the CR as well as the budget resolution. And probably I'm a creature of the Senate, so probably in true Senate form, at some point, we'll see some kind of large deal cut on a variety of these things. My expectation is we probably won't see that till sometime in September. But this will certainly be in the mix as part of those negotiations.
Wow. Do you not think we get the CR till September, just to be clear, Rosemary?
I don't think we get the CR until September now.
Boy, okay, so then the reconciliation has to wait until after that. Doug, is there a chance none of this gets passed when everybody comes back? None of it.
Yes. Oh, well,
so government shuts down in time for the midterms. Okay.
No, look, I mean, they'll stave off whatever they can that's going to be politically damaging to them. I mean, they're already way down in the polls. They're thinking maybe they lose the Senate, so they're going to try to prevent the worst of the worst situation. But look, this is not a highly functional Senate here. Donald Trump took a very small majority and turned two of those key allies against him by primarying them, or I guess supporting their primary opponents. So they'll do the bare minimum not to threaten their majority, and I think that'll be it. Even in the lame duck, it may be complicated to get stuff through, especially if Democrats don't do particularly well in November.
We're going to be bringing the lame duck report back. I can just feel it. Go ahead, Rosemary. You've got 30 seconds.
No, I was going to say, I certainly hope we don't shut down the government. My expectation is that we won't shut it down. But I do think the Senate, it is the more deliberative body. And I do think that it's going to take time to work through both the CR as well as a budget resolution. I mean, those things take a lot of time.
The more deliberative body, described by Patrick McHenry as a bunch of bulls laying in a field in the sun chewing grass. Yeah, we might be chewing subs here in a minute. The toast of New Jersey is with us in Rosemary Becky and Doug Farrer. They'll be back in our second hour as we wait for Jersey Mike's to go live here. JMKE is the ticker. James will have a number 13. Mike style, right, James? Mike's Way. We'll find out what Mike's Way is on Wall Street. Maybe in the next hour. We'll have that for you as soon as it goes live, right here on Bloomberg. Make sure to subscribe to the Balance of Power podcast. Go to Apple, Spotify, wherever you get your podcast. Grab a sandwich and listen to us anytime at our website. It's Bloomberg.com.
Now, your 3-day weather forecast on Bloomberg 92.9.
More showers across the Boston area from time to time. There may be a thunderstorm as well. Temperatures will be near 70. Any showers end gradually overnight, lows 60 to 65. It'll become partly to mostly sunny tomorrow. There may be a shower in the afternoon, 75 to 80. Saturday, partly sunny, 80 to 85. Sunday, partial sun as clouds increase, 80 to 85. I'm Rob Carrollton with your weekend forecast on Bloomberg 92.9.
Breaking news first. The Fed decides.
No change in rates, 9 in favor, 3 dissents.
All 3 of those voting for an interest rate hike.
Where necessary and appropriate, we will not hesitate to act.
Reaction first to the Kevin Warsh press conference.
The market is trying to tell you the direction of travel is going to be higher.
I do think we do get rate hikes in September.
They're starting to migrate towards tightening policy.
For the latest headlines from the Fed, stay with Bloomberg 92.9.
Data storage used to be straightforward, but AI has rewritten the rules. The data it needs to thrive is trapped in aging infrastructure. In fact, less than half of enterprises report that their data is AI ready. That makes initiatives stall before they start. Instead of fragmented systems, companies need a unified data platform, one intelligent layer that delivers data at the speed of AI. Because good enough isn't good enough in the AI era. Learn more at everpuredata.com.
Well, it's official. My friends have all switched to Pure Talk because I told them they could save a bunch of money on a super reliable high-speed network with unlimited data. And because they're my friends, they trust me. As for the rest of you, well, Pure Talk understands that even though you might like me, you're not just going to take my word for it, nor should you. For that reason, and for a very limited time, Pure Talk is offering any of their plans for just $15 a month for the first 3 months, including their top-tier unlimited plan that normally sells for $65 a month. Think of it like a test drive, a super simple way to save $150 while you kick the tires on Pure Talk's blazing fast network, and a fine way to see for yourself why I switched from big wireless, along with a few 100,000 of my closest friends. Dial pound 250, say Mike Rowe, and be connected to Pure Talk's friendly U.S. customer service team. Again, dial pound 250, say Mike Rowe, and let the savings begin.
Join us for Bloomberg Power Players on September 10th in New York. Set against the backdrop of the U.S. Open Tennis Championships, Bloomberg convenes the leaders shaping the future of sports business. From athletes and team owners to commissioners and investors, hear the market-moving conversations driving the multi-trillion-dollar sports economy. Register now at BloombergLive.com/PowerPlayersRadio. That's BloombergLive.com/PowerPlayersRadio.
Today's AM radio is stale and repetitive. Stay with Bloomberg 92.9, your best source for news on the FM dial, and get breaking global news with context. Bloomberg 92.9, faster, smarter, better. This is WBOS HD1 Brookline, Boston. WNBP Newburyport. W291 CC Haverhill. W221 EE Topsfield. Programming paid for by Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Iran fires missiles into Jordan and Kuwait while LNG ships are struck in Egypt. Welcome to the Thursday edition. As the war with Iran threatens to widen into a regional conflict, with another round of strikes overnight by the U.S. I'm Joe Matthew alongside Kaylee Lines in Washington. Kaylee, this comes a day after the Saudis entered the conflict, actually striking targets in Iraq.
Yep.
The oil prices, interesting today, are pulling back.
Just ever so slightly.
Yeah.
We're still in and around $90 a barrel for Brent crude, as there is concern, to your point, Joe, that this could escalate not just between the U.S. and Iran, but to other players in the region, and perhaps widen in circumference, if you will, the area in which oil traders and others have to be concerned in the Middle East. It remains to be seen whether or not CENTCOM will continue strikes, as we saw last night. We have not yet heard from the president today about this, and it's unclear if we will.
That's true. He's been talking about the confirmation process for Todd Blanche, at least on Truth Social. We haven't heard from him out loud today, but talking about his nominee for Attorney General, whose confirmation vote has been delayed because of opposition from two senators who the president chose to primary, and now they're having their day, apparently. But it's unclear exactly when this might happen, if not till after the August recess.
Well, or after the election, President Trump calling out Senators John Cornyn and Tom Tillis by name, saying that he has, and this is a quote, no objection to temporarily withdrawing Todd's name from this process if they don't do the right thing, and putting him back after Cornyn and Tillis are out of office. Of course, there's no guarantee that they'll be replaced by Republicans.
That's correct. Yeah, we'll have a lot to talk about there when we check in with Tyler Kendall, who's at the White House. And also interesting, as we seize on the news from Iran, we're going to spend some time with Jane Harmon. She's actually going to be with us in studio here. There's a lot to cover, not just in what's taken place over the last 24 hours, but we'll get her view on this whole region today, live from Washington.
Yep, we're looking forward to that conversation, but we kick things off, as always, with a check on the markets, and for that, we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee and Joe. Indeed, looking at a sudden spike higher for the S&P 500 index. Best level of the day right now, up 105. We're higher by 1.4%. Dow Industrials up 1.1%, making up some of yesterday's sell-off on the Dow. That is a gain now of just about 568 points. NASDAQ Composite surging 623 points now, up by 2.5%. NASDAQ 100 index up by 3.1%. We're seeing a stampede of dip buyers coming into the market for semiconductor shares. The SOX, you don't get quotes like this that often, up 8.1%. That is the Philadelphia Semiconductor Index. The VIX back below 18. The 2-year, a day after the Fed decision, 4.21%. The 10-year now at 4.65%. And the 30-year, 5.20%. Gold up 1%, 41.09 the ounce. West Texas Intermediate crude down 0.4%. WTI 84.13 a barrel. Brent 89.65, down by 1.2%. Coming up after the close of trading, two more members of the Mag 7 index. We will be hearing from both Apple and Amazon. Apple ahead of earnings, down 1.8%. Amazon ahead of earnings, up 5.3%. Speaking of Amazon, its driverless car business, Zoox, will be allowed to commercially deploy as many as 2,500 vehicles annually in the U.S. over the next 2,000 years. That means 5,000 additional driverless cars on the road. Yesterday, we heard from both Meta Platforms and Microsoft. Meta down now by 9.6%. Microsoft, a stock we were talking about for much of the morning here, we've got Microsoft surging by 16.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet watching the markets for us. Thank you so much. When Jersey Mike's begins trading in these public markets, we'll, of course, keep you apprised after a $1 billion IPO priced at $23 a share. They're indicated right now to open just below that, and we'll, of course, bring you details as we get them on when that debut happens. In the meantime, we're watching Capitol Hill, and what, frankly, is not happening on Capitol Hill at this time. It was supposed to be today, this morning, that the Judiciary Committee was going to start marking up the confirmation of Todd Blanche to be the next Attorney General. Problem is, two members of that committee, Senators John Cornyn and Tom Tillis, are not yet there to vote to advance Blanche because of concern over the anti-weaponization fund and the audit immunity deal for the president and his family, and wanting written language from the DOJ to alter those things or commit to not pursuing them. That hasn't happened. Their votes aren't there. Therefore, the vote didn't happen. And perhaps it won't for the time being, as President Trump today suggests he's open to just pulling Blanche's nomination until both of these men are out of office, Joe.
Yeah, it's pretty interesting to hear the president's words and not clear exactly who he would replace Blanche with unless he would remain on an acting level. There was talk in the tip sheets this morning, Kaylee, of Bill Pulte being installed just to poke senators in the middle of this. He writes, Todd Blanche is a star and everyone knows it. He has the potential to go down as one of the greatest attorney generals of all time. However, John Cornyn of Texas, Tom Tillis of North Carolina, both of whom I refuse to endorse, are refusing to vote for this great nominee. He will remain in any event as acting. He goes on to say, Kaylee, I have no objection to temporarily withdrawing Todd's name if they do not do the right thing. I'd be very curious to see how he handles this. Of course, the DOJ could simply provide John Cornyn a piece of paper and this would all be done.
Well, yes, that's very true. And we're going to get more on this with Tyler Kendall at the White House in just a moment. But first, some breaking news. As we said, we were waiting the debut of Jersey Mike's. And indeed, that opening has now happened at $21 a share, so $2 below that IPO price of $23. Remember, $23 was in the middle of the marketed range. This IPO raised $1 billion, and we're losing a little bit of that value, at least in the first few moments of trading here. Jersey Mike's opening at $21 a share. Bloomberg Markets correspondent for TV and radio, Nora Melinda, is standing by in New York to walk us through this. So, Nora, a little soft on the debut here.
Yes, we are seeing shares a bit lower. Of course, we do see the open for Jersey Mike's, JMKE on the ticker. The IPO opening at $21 per share. The IPO was actually at $23 per share. So a tiny bit of a disappointment here for some investors. We do know that this was actually, though, an IPO that was 15 times, oversubscribed. So that really just tells you about the institutional demand here, especially when you think about investors being picky. If you just think about a year ago, we saw an IPO market that felt pretty quiet. This year, we're getting a ton of big names. This company in particular, Jersey Mike's, really showing you that investors are still looking at companies that are in the consumer space that have great value. This is a company that is known for high margins and also being asset light.
Down a little over 7% now, just over $21, down 7% from the IPO price. It is interesting here when we think about an IPO, to your point, Nora, 15 times oversubscribed. We hear that about a lot of IPOs, and it does not always correlate with the debut. Today, I guess, is the latest example of this.
Yes, we're seeing this clearly being demonstrated today as we're seeing Jersey Mike's opening here and seeing some trading, but we really are seeing investors in this market looking for quality names. We've been seeing a lot of focus, a lot of concentration on what has been market leadership, which is those tech companies. SpaceX, of course, being a name that we've been really watching very closely. But it is interesting, on Wall Street, as I'm speaking to my sources, about seeing a bit of diversification, and Jersey Mike's being an example of that. Maybe not all of the money in the market has to go exclusively to tech. Maybe there is room for some of these other names. So we'll have to see whether or not this stock finds its way back to the upside.
Well, and when we consider the money that was raised in the initial offering, Nora, do we have a sense of what the company is intending to do with it?
Yeah, I mean, I think that is something that investors are going to be continuing to watch and seeing how they want to deploy it. Of course, we know that this is a company that is one of the biggest chains in the United States. They also have a presence in Canada. So we know that this is also a Blackstone-backed company. They did hop into the company about a year ago, and we're already seeing this IPO coming out. So we'll have to see whether or not the company continues to considers using this capital toward really building out more stores, or how they intend to really use this money to address their balance sheet.
Pretty amazing, Nora, to see there's already a buy rating out there. This stock has been open for trading a couple of minutes. First buy rating from Melius Research with a price target of $30 a share. Would be a nice jump from here if it happened, pointing to the company as the only scale premium operator in a category whose dominant incumbent is closing roughly 700 restaurants a year. I guess talking about Subway there. It's all up in the eyes of Melius for Jersey Mike's.
Absolutely. So it's interesting to see that buy rating coming out just so quickly. The stock has only been trading for just a few minutes here, but we're already seeing that buy rating on Wall Street. We'll have to see what other analysts are saying and where they potentially see opportunity within this company. That $30 price target really telling when we take a look at where the stock is trading right now.
All right, you got us all hungry, Nora. Thank you, as always, for walking us through a new issue. Jersey Mike's today. We'll keep tabs on the price, a couple dollars below the IPO at the moment. Live from Washington here on Balance of Power, we continue our conversation about politics. and apparently a confirmation process now on ice. That would be Todd Blanche, the president's acting attorney general, because of, as we already laid out, the opposition from 2 senators who have crossed the president, or maybe it was the other way around. They want actual hard paper and a guarantee that the president's proposed anti-weaponization fund will not happen, and they have not received it yet. The president's not pleased about this, and we bring in Tyler Kendall from the North Lawn of the White House. He was out posting early on this, Tyler, and it looks like he says he might even withdraw Todd Blanche's name.
Well, Joe, that's the latest strategy point from President Trump, that we could see Todd Blanche's nomination withdrawn on a temporary basis, seeming to indicate that he would then renominate him after these 2 Republican senators, John Cornyn, the Republican from Texas, and Thom Tillis, the Republican from North Carolina, are out of office after the midterm elections. Now, the understanding here is that Todd Blanche would very likely continue in an acting basis, so not much would change, but it's an interesting political calculus, considering that there are no assurances that Republicans will maintain control of the Senate chamber. So the idea had been to try to get these nominees through as quickly as possible if they do need Senate confirmation. Now, as you're laying out here, the demands from these senators is that there has to be something actually in writing, put pen to paper, that $1.8 billion fund, that alleged anti-weaponization fund, those plans are being scrapped, as well as that these senators want assurances that this provision in that legal settlement struck between President Trump and the IRS, giving him, members of his family, business immunity from this past IRS audits, that this will not extend to any third parties. They want a little bit more of a firmer guardrail around that IRS settlement. At this point, we'll have to see where it goes from here, but President Trump clearly putting out one option when it comes to holding firm, I guess, with his political agenda.
Yep, so he has options domestically, Tyler. He also has suggested, and it's been widely reported, that he's considering his options for escalation, or the lack thereof, when it comes to Iran. Until yesterday, it seemed that he wanted to pursue diplomacy anew, and that surprise attack on U.S. forces in Jordan led to the U.S. retaliating in strikes last night. Do we know if there will be another round this evening?
Well, Kaylee, at this point, the White House has kept both options on the table, one for further escalation and this continuation of strikes and retaliation, that cycle it feels like we're in, but also the potential that we could see maybe some sort of diplomatic channel open here. We did hear from Pakistan's foreign ministry earlier today, of course, a key mediator in this conflict, seeming to imply that there are negotiations happening between the U.S. and Iran when it comes to potentially reopening the Strait of Hormuz. But at the same time, pair that with other headlines this morning that said Iranian state media reported that the IRGC had targeted again U.S. forces in Kuwait and Jordan. And we have this now potential, as you both were outlining at the top of the program, that the conflict could spill over to the broader region, including the fact that we saw overnight 2 LNG tankers hit off the coast of Egypt, marking the first such attacks in Egyptian waters since the conflict began. So, Joe and Kaylee, there is a lot of room for escalation here.
Indeed. All right, Tyler Kendall reporting live from the North Lawn of the White House for us. Thank you so much. And as we consider the room that exists for escalation or for diplomacy, we turn now to former Congresswoman Jane Harman, the former ranking member of the House Intelligence Committee, who is here with us in our Washington, D.C. studio. Good to see you again, Jane. Thanks for being here on Bloomberg TV and radio. We seem to be stuck in this cycle here of we're talking, we're striking, we're talking, we're striking. What breaks us out of it, and in what direction?
I just think Trump is afraid to lose, and he's keeping everything going, hoping he won't lose. But guess what? I think he's likely to lose, and not just lose here, but the fact that missile interceptors are tied up in the Middle East instead of going to Ukraine, or instead of being prepositioned in Asia against a possible China takeover of Taiwan, means he may lose elsewhere. So I think this is hugely dangerous, even more destabilizing than before. The Senate's about to go out. The House is out. There hasn't been a really serious, focused authorization to use force here, and we could lose more Americans while we're at it.
What does Jane Harman think when Saudi Arabia puts fighter jets in the air to strike targets in Iraq, when Egypt is being targeted by, we're not even sure who, drones are hitting LNG? We talked about Kuwait and Jordan. At what point do we start calling this a Middle Eastern war?
Well, I'll go right there. It is a Middle Eastern war. It's not that every country is at war, but every country is a target. Think Egypt, which hasn't been a target. Think Jordan, which is a target. And the Saudis haven't been getting along with the neighborhood, so maybe there's some play there that I'm missing. But my point is, the danger of this spreading is huge. And we are tying up what's left of our pathetic, fragile defense industrial base in a region where it shouldn't be.
Well, that probably is sending something of a signal to our adversaries, Jane, to your point about we could lose elsewhere if we lose in the Middle East. Is that genie already out of the bottle? Or if all of this were to stop now, is the U.S. adequately prepared to address needs should they arise in other theaters?
Not really. I chaired something called the Commission on the National Security Strategy. I know you both have read the report and loved it. 2 years ago, and on a unanimous bipartisan basis, we said the DIB, the Defense Industrial Base, is anemic. We made all kinds of suggestions, many of which were ignored. We also said our diplomacy was being starved, and that's a huge risk here too, because I don't know who is talking to the Iranians and whether we have a serious, sophisticated team doing this in Pakistan or anywhere else. But yes, think Ukraine. Zelensky was just here begging for missile interceptors. Trump promised them and promised that some U.S. primes would be able to build some of these with Ukraine in Ukraine. However, that's going to take years, and Ukraine is a big, fat target right now for Russia.
I want to ask you about the rhetoric that the president has been using, because there's a lot of tough talk, even as he says that they're begging for a deal and we could have a breakthrough, we're going to have a deal. Not only has he threatened civilian targets like power plants and water desalination plants, he told Fox yesterday he was going to beat the effing S out of them, which draws me to this quick, if you would, data from Cardiff University. You spent enough years in politics to appreciate this. Cursing is in. Presidents, vice presidents, presidential hopefuls have used profanity at least 692 times in public since 1919. 605 of those were in the last 10 years. A lot of it is because of Donald Trump's approach to politics. Bernie Moreno's using the F word with Dr. Fauci up there. But how does that resonate overseas in a different language, in a different culture? How is that interpreted by Iran?
It's by Iran, I'm sure it's offensive, but they're offended anyway, and frankly, their behavior doesn't really justify their offense. But broadly across the world, people are really insulted. And just even think our neighbors in Canada. This language is terrible. Do you want your children to use these words? I remember my grandchildren had the Bad Word Club, which I unfortunately qualified for a few times and had to run around their apartment.
Not you.
Even me. But it wasn't that bad, and it was in private. But this is ugly, and both sides are using it. It's not just Republicans, but to have the president of our country use words on a regular basis that are truly inflammatory just is very troubling and hurts further U.S. leadership.
Well, as Joe mentioned, the colorful language from one senator, Bernie Moreno, yesterday, I had my eye on all of the senators as Jane, as we were having this conversation, we're just taking a vote on another war powers resolution, and yet another has failed, 49 to 50. Are you surprised by that?
Well, I remember the days in the George W. Bush administration, not my party, when we voted, when, first of all, the president made the case to Congress